What's going on, traders? Welcome to my stream. In this video, we're going to discuss day trading beginner's guide. This is a very good guide for small caps, like trying to understand the small cap market, how this market moves, how I've been doing, how to manage your positions, what kind of setups I have. This is just an introductory introduction for what you're going to be doing when you're trading small cap securities. I've been trading for 16 years and I've had one of the biggest weeks so far with a really, really big P&L. This is kind of like what my P&L looks like for the week. We are in December 2024, and I'm very happy to share this P&L with you and show you like what is possible if you're trying to get into small cap stocks with a very small amount of money, ideally between 1,000 and about 30,000. So this is ideal for small cap security. This is kind of like how my week has went. As you can see, multiple days in a row, I was pulling around 10, 2K, 10K, 2K, and and I had a little bit of a loss here, a really big gain, and nothing, and then a win, a loss, and then three green days in a row. This is kind of like how my awesome December has been so far. Trading from around 7 o'clock, 6:30 in the morning till sometimes all day, depending on my battery. It's been a really hot market, and I like to share, my routine, my strategy, how I think about trading every single day, and how to profit from a very volatile, moody market, and how can you exponentially grow your small account into a substantial account. These are like some of the basic fundamental knowledge that I have for you guys. To get you guys interested in some small cap activity. I'm sure penny stocks and stocks under $10 are very hated by the overall market. But if you listen to what I have to say, if you study as much as I have, you'll be able to exponentially grow a very small account in a very substantial account in a very short period of time. And I'll show you exactly how this how I will able, this is kind of like my setup. I actually trade about 7 stocks every single day, and I look at 7 different stocks with my Alienware R2, I think 16, the 4090. I just updated it, and this is what I really look like. And I also talk on the microphone, and I'm in my own little chat room. Link in the description below if you like to join me in my chat room. Anyway, so this is kind of like what my PNL looks like for the pretty much trying to not be too loud. This is kind of like what my PNL looks like for the week, for the first week, second week, and third week, and I will discuss like what started like this whole week craze. The market goes through the small cap market goes through fluctuations. One hot is really cold, one week is really cold, one day is really hot, one day is really cold. It's a very mixture of things, and you have to feel it out. It's a very field type environment. But you can see that I do have a bunch of red days here in a row, but I do say I have some really huge exponential days over here. And sometimes after a loss, I pretty much come back swinging pretty hard. So that's kind of like what you would expect if you really, really, really got into it as much as I have. So this is kind of me. I like to travel the world. I'm a world traveling day trader. The reason I picked day trading is because I have the ability to travel, and I travel between Europe and the States very often. Sometimes in the summer I go to Europe because it's cooler in the mountains, and in the winter I come in the States where it's warmer. So depending on if I have, I am able to maneuver and move. And this is me in San Juan, Palermo, Granada, Santa Cruz. This is actually pretty recent. Is the fall of 2024. I actually had a really long cruise while I was on my laptop, and also being in the chat room and also watching the market. So I was able to make money a little bit from here and there, and I was also able to travel at the same time. Sometimes it's a hot market, sometimes a cold market is depending on Sometimes you just need a break, so you might expect that from any type of market. That's just the life of a trader. I really enjoyed Granada. Really enjoyed Palermo. Walking around was awesome. Really enjoyed San Juan, and this is Santa Cruz. So I'm big on islands and big on big on Europe and big on the States. And when it's hot and it's cold all the way in the wintertime. So what is day trading? Basically, it's not this. It's not this. This you buy something and it always goes up to the moon. It's not that. It's not that. You just cannot just buy something and hope and pray or spray and pray. Whatever, you need to have a strategy. Obviously, you do need to have a strategy because hoping, praying, spraying and praying is not a strategy. Sometimes you're in your cold market. If you don't take your stop loss, it's gonna go much lower than you all think. And sometimes you just nail it the wrong way. Sometimes it goes the wrong way. So it's very important to understand and have a plan. Have a plan when you go in, have a plan when you come out, so you can continuously, not blow up your account. A lot of people blow up their account. It's very common for people to blow up their account. So in order to not have them blow up their account, because you will blow up your account no matter what you do, the first year if you start out with no money, that's uh, you need to have a strategy. This is actually the strategy. Day trading, trading is researching the market. Right here, finding similarities between different setups, finding your edge, and calculating a good risk reward setup. Then diving in and making the trade live. Here I have a bunch of a bunch of this is kind of actually out of my future book, future course that I will be releasing soon. I have, aftermarket with news setups, buy the daily breakout, choppy Thursday, some chapters here, multiple day short squeeze, intraday trendline breakout, gap up short, first red day, first green day bounce, day two continuation. I mean, these are very basic strategies that I use every single day, and I try to size big pre-market VWAP reclaim, pre-market 7 a.m. push. I have different strategy depending on like what kind of market I'm in and what kind of and all this is going to be compacted in a very long course that I will be releasing soon. You can sign up to my email list below. I am working on that course. I've been working on it for about 3 years now, so I constantly am adding new screenshots to this. And I actually have the data that it's there. And it's felt. It's not only the data, like a lot of people want to just see the data. The data is also felt by me in trade, so it's a big difference between having the text version of the data and then also feeling the data out. That's a really big difference. So having a strategy to these penny stocks or small cap stocks is essential for your survival in the small cap market. Some of my favorite setups probably be buy the daily breakout is a pretty good one over here. Gap up shorts, first red day short, first green day bounce, short the daily trend line resistance, news, Amazon, Google, Facebook, multiple day short squeeze, and then you have some psychology over here with some very good rules to follow, a very good position sizing, very good, cycles of the market, very good, applying float to the market. And all this is going to be in a 10-hour, probably a longer course that you can sign up. It has not been released yet. But this is basically what you're going to be looking at. This is the course that I'm working on to release for you guys to, dive in and much deeper. But right now, we're just going through an introduction. Day trading has allowed me to travel the world and have really exponential gains like this one. Like in 3 weeks, I was able to pull a lot of money from the market. It's almost 6 digits shorting, buying, and having a routine and a plan. And allowed me to travel all around the world, cruising, trading, traveling, flying different locations and different places. And it's a great job for anybody that's looking for financial independence and of much of being your own boss. being independent and not, relying on anybody, having your own schedule and so forth. Sounds very good. But you must follow rules and you must know your setups. Otherwise, you will not have financial independence. Very simple and straight to the point. So now we have to understand the market like this. So we trade the small cap market. This is a niche. There's different types of markets. There's the big caps, there's medium caps, there's small caps, there's micro caps, and there's also options, markets within markets. We trade small caps. They're independent of the overall market, but sometimes when, the overall market is dumping, you can have, small caps go up, and sometimes when when you have the overall market going down, small caps go down with it. It really depends. It's really no rules. Sometimes they all go up and it doesn't matter. And sometimes the market's crashing and all small caps are running just because they're hot. And sometimes the market goes, up and there's no small caps running. So it's very independent. It's very moody. What I've discovered is like after a big mover, we have something called sympathy momentum and a beginning of a hot market. The market goes through cycles, hot and cold, cold and hot. Sometimes, you have 2 days of market being cold, and now, right now, the way the market is, you have 1 or 2 days which they're somewhat cold, warmish, and like 2, 3 days that are really hot, which where you have 6, 7 plays. That's what I've been noticing lately. So we're in a, 1 or 2 days, maybe a warm up, and 3, 4 days in which you just have plays everywhere. We are we are hunters of volatility. This week has been, a little bit different because this. I mean, if you can see here that this, as you can see here that I have made, a lot of money on this day, nothing on this day, a little bit lost here, but you can see so like in this week I was making pretty steady here around 2K per day, and then on Thursday here I was making 10K. So you have to really understand like market. Sometimes, half a week could be slow and then half a week could be hot. That's really what the cycle has been. So today has been the week before Christmas. So, right now we have had one big runner that actually spiked up the whole momentum of the overall market, of the small cap market, and this security was Nuke. In the beginning, it was a $1 stock, and in the middle of the day, it became an $18 stock, and that's pretty crazy to see something like that. We do experience this sometimes and multiple times. And in a hot market, in 2020, 2021, we were experiencing something like this every single day. Right now, we're probably experiencing every other week or every week, or at least one of these. Not really every single day. One of this, like, it goes from 1 to 18. So we do have like one a week. So we're definitely in a hotter market than we were in a bear market. But when we were in a really hot market, 2020, 2021, we have seen these things were regular and normal every single day. But right now, we have you have to understand, like, say, there was no 100% gappers, and suddenly you have one stock going up from $1 to $18, is going to spark some interest. We're going to have some follow-up momentum. So this pretty much spiked up the momentum this week. As you can see, Nuke over here, we are hunters of volatility. Nuke went from $1 to $68. I remember dry ships went also from about $1 or 50 cents to about, I don't know, to about $100 in like a day or two, which was crazy. But this one did it as well. So New kicked off a very hot small cap market, and after, obviously you can read technical analysis. You can see over here that these are daily candles. So in this candle, we went from $1 to like, 17 in one day, and then the next day, 18 to like 70. So after this big mover that happened actually on Tuesday, they were following up this ticker. There was at least seven or nine plays, every single day. So the way I pretty much, once we get into a hot market, I have different strategies that adapt to my to my routine. One of my strategies, developing a trading plan. Like the trading plan is usually wake up in the morning, wake up around 6:30, and trade till about 11 or 12, sometimes in the middle of the day as well. And you can see so here that after Nuke ran so much, we ran through, I don't know, 17. We had three tickers here on the top gainers, and all of them gave this is the top gainers of right after the Nuke day. You can see that trading is really easy. Trading is really easy when you have a really big runner. Like once you have a really big runner, people are gonna dump the money in the next one and the next one and the next one. And you can see in this scenario, PRPPLRZ ran from $1 to like 4.15 the next day, and then came down to 250, and then we spiked to 450. That's a really big spike, and after that it sold off. This is a beautiful setup. This is a really good example, and you can see it was number 3 on the scan. And just like when you thought it couldn't get any easier, check out this one. LITM in the morning. We pushed in the morning, we came back, we did a VWAP reclaim, and from 50 cents to like 80 cents, back down and back to $1. I mean, probably this one is a example of a choppy ticker, but then again, I mean, this ticker 30 cents to $1, it's it tripled. You can see this one, CGTX. CGTX in the morning at around 7, we have a textbook breakout of 90, and we hit 30 cents, 130. Potential profit from probably $1 buy to a 130, probably be around 34, 30%, and then you can short it on the way down. As you can see, and in order to catch these movers, as you can see right here, this is my pre-market gap scanner, and you can see these are, the first 3 gappers provided liquidity and provided range and provided opportunity to trade. This is just one day. After one big mover like this, you have to understand like the liquidity is going into to smaller securities, and suddenly they pop up to my pre-market scanner here. One is up 140%, one is up 155%, one is 205%, and you can see like all of these provided very nice opportunities. Like this one provided a double, this one provided a 40, 50%, this one provided, I don't know, 30%. And not only that, also in the middle of the day, we had a huge opportunity here of Quamco, a similar price action. Like you can see, like Nuke was around a $20 stock. So now we have sympathy momentum of a $20, $30 stocks. And then this one went from, I don't know, $30 to $60, which is unheard of, very, very nice liquidity. So this is just one day. This is me profiting after Nuke. I'll even show you that day on the 18th. This is the 18th here. On the 18th, I made around 7,000 right here. This is the day. This is the day. And initially on the 17th, I actually lost money on this day because I was trying to force things on other plays. So, sometimes you're in a cold market. Is it important to take your maximum stop per day or maximum stock per ticker? And then after that, it was just, 3 days of just hitting them left and right. I mean, you can't possibly win. I win 70% of the time, but sometimes, I have one red day. I have 3 red days out of 15, which is pretty good. I'm still working on hitting, trying to hit my max loss and walking away. But this is just one day. You have to understand, like after Nuke, this is just one day. We had 2 or 3 or 4 or 5, and it was still, you know this is just one day. So after that day, I made, this is just one day on the 18th. After that, we have another 5, 6, 7 tickers on the 19th, and we have another 5, 6 tickers on the 20th. So these are opportunities that I have every single day to my disposal. Say I lose on one, I'll be able to make money on the next one. So, you know, I am able to travel the world. Not everything's going to go up. You have one big mover that pretty much spikes up the whole entire market. And then you have a lot of sympathy momentum. We have PLRZ, and then you apply some strategies here, the downtrend breakout, buying it as it makes new highs over here. You have, LITM buying it as it breaks out over here, or buying it at VWAP reclaim. You have CGTX buying it as it breaks right here, 90. You're just applying simple technical analysis or some courses that I have. and watching my pre-market scanner. I have built this pre-market scanner. You can see CGTX here hitting my pre-market scanner at around, I don't know, was it, I don't know, what was the price when it was up 20%? You can see the price. I don't know where it says there, but it's up like at 720 right here at around 60 cents. I caught it. I catch these things very quickly on my pre-market scanner. You can see how it hits there. It first hit when it was up 20%. So after it hit 20%, you can buy the dip. And this, I mean, all three of them were really winners. And there's, I mean, this other one, LITM, my scanner caught it, and then I watch it for a VWAP reclaim, and pretty much I try to buy and try to size in on a trade here. And then actually I never seen this trade before, VWAP reclaiming and making so high. But you can see there's momentum and there's liquidity. And PLRZ, the flow was not on this one actually, and my scanner didn't catch it. But once all the other ones the next day and the next day and the next day, like trade ideas, sometimes the float doesn't ring, but it should have been on my pre-market scanner. If it's not, it'll be on your gap scanner. So you got to make a plan. You got to have, in this scenario, the downtrend breakout play, buying it around 275 and reaching 480. In this scenario, buying high to daybreak. In this scenario, buying the high to daybreak. And then you have to, plan whether to go short or whether to go long, and so forth. And this one, QMCO, this was just let me put it this way. So you had four opportunities in just one day after nuke, which was over here. And then I had another five or six opportunities over here. Another four or five opportunities over here. Opportunities that I make more than 20% for each trade or more than 10% per each trade. So I use my strategies, and I use my scanning abilities. I use my knowledge. I use my scanner, and I pretty much plot everything out on every single screen, and I try to call them out as I'm buying it, as I'm trading them, and as I see them fit. Developing a trading plan, finishing the day, and doing it again tomorrow. This is my trading plan. I wake up each day 6:30. Sometimes on Monday I wake up later because it just doesn't move much between 7 o'clock and 9. But most of the time we get some movers, and I put every single screen, I have every single chart in my setup. You can see that I have a multiple screen setup, and I try to make a decision of what to trade. I mean, there's tons and tons of tickers every single day, like one ticker, two tickers, three tickers, four, five, six, seven, eight. That's like really what I look at every single day, and I just sit on this comfortable chair and I talk on the microphone and I try to plan my trades. And pretty much sometimes I have five, six tickers I'm trading that day. Sometimes I have one. I trade a lot, and I'm very happy trading so much. Sometimes I trade too much. Sometimes I size in too much. I mean, it's a work of art. It's a 16-year journey for me, and you're not gonna learn it. You're not gonna learn it quickly and very fast. What you can do here is understanding that this is kind of like a job for me. Each day you have to put in your best. You need to apply the setups that you have studied throughout the years and make a good risk reward decision in each scenario. Like these are my setups that I have. I have a screenshot of each chart with the float, with the percent gain, with the news, with the setup, with the market. And I try to, have, at least 10, 20 examples of this setup. And then I put real money on the table. Essential tools for day trading. This is actually very important. So first off, you need a really good broker, that allows pre-market trading. Like most brokerages, TD, Ameritrade, Schwab, and all these, Fidelity, they all allow you to trade pre-market at 7, and that's fine. But some of them move before 7. Most of the time, you want to be up before 7, before your brokerage is up. And I also recommend Trade Zero if you want to trade around 4 a.m. and having some hotkeys. I do recommend Trade Ideas, how to scan for stocks, plus my settings. You need to have my settings. Like I have my own custom built settings that I'm gonna go over, and I recommend having you in my chat room, and me talking on the mic. And that's a link in the description below. We're running right now. Limited time. What is it? Winter fall of 2024 sale, and after that, it's pretty much other prices. Trade ideas. This is probably very important. A lot of people underestimate how important trade ideas is, but once you don't have trade ideas, you're not gonna see the market as clearly. In trade ideas, I have my own custom built scanners. I have crafted throughout the years. I actually went in there and put in my own settings, what I need, what I want. And have trade ideas spit out a ticker in real time to show me like what is that ticker doing and what is that ticker moving and what is moving. I have five different scans on my trade ideas: pre-market gap, midday gap, midday top gainer, midday scanner, and pre-market scanner, the halt scanner, and the aftermarket scanner. I have six scans built in my trade ideas. And to tell you the truth, there's other, if you don't have the money for trade ideas, and if you do not have the money for the scanners, there's other free ones you can use on YouTube that pretty much you have trade ideas and you can see what tickers are moving. But I must warn you that 80% of those tickers that his trade ideas spit out are useless. It's probably going to confuse you more. I've seen like, my trade ideas in the pre-market. I see like five tickers and like four out of five are tradable. And the public free live stream, not only you get a 3 minute delay, but it's going to spit out at least 20, 30 tickers, and you're going to be just more confused. So so don't do that. It's not worth the trouble going through 30 tickers. It's just gonna make it harder for you. You're better off just taking my settings and loading them in your trade ideas and just going off that. You'll be much better off than just using the free one. The free one's just gonna confuse you even more. So this is a pretty good. I mean, I put in together. I've scanned and back test every single ticker, and I know what to look for and how to find them every single day. Tips for success and avoid common mistakes. Things you should not do. These are some of my important rules that I have here for you. These are some of my important, like, you think that trading is gambling and you treat penny stock as a lotto ticket. A lot of people treat penny stocks as a lotto ticket. They just put in their 1,000, 2,000 in there, and they think it's just gonna go. And I used to do that as well. And most of the time, like 10 out of 10 times, I usually lost. And only one time the stock after 5 days it went up, and instead of selling it, I kept holding it, and then it came back to my entry. So that was terrible. So not studying a few setups before jumping in with real money. You have to study, a few setups before jumping in with real money. You have no sim training, simulation. I mean, you need to be green on the simulator before using real money. You should not go in with all your money with no skill nor practice. That's second off. That's far. Or number five, don't try to buy a service that promises alerts. I've seen a lot of people advertise this. This is a really good a really good a lot of services advertise you can buy here and sell here. It's very much in style, very much catchy, that you could just receive a text from somebody, buy here and sell here, and it's very much sometimes it works and sometimes it doesn't. So you really have to, I mean it's not gonna be all some of the greatest alerts of all time. You need to, I've seen advertisement like this, very, very cautious. You take it always with a grain of salt. And be very cautious when people advertise they're gonna give you alerts, because they don't have your best interest in play, and they will trade and they will sell quicker than you. So try not to buy a server that promises you alerts, and try not to put your own real hard-earned money on that service and follow the alerts with real money. At least back test it a couple times, or back test it a lot of times, like and only after it aligns with your belief that that stock will go, then reuse real money. Expect number five, I think. Expect somebody to change your life with $100 if you subscribe to their service. A lot of people think that if you buy somebody a pair of shoes, the person is going to change your life. That's very hard to do. Uh, trading is a very much a place where you need to treat it as a 2-year career at least. I don't think the best trader in the world was ever profitable his first year. Only after 2 years at least. You cannot expect that. You need to show up. You cannot show up and wing it with no clear plan. You always need to have a plan, and always know what to do in case that plan fails. Um, Things you should not do: not having a plan, or worse, having a plan and not respecting it. That's really good. I mean, when you have a plan, you need to respect it at all times. Let's see the next slide. That's pretty much it. This is the end. This is actually the end of my slides. This is the end of my presentation. Like, you need to look at it as a 2-year, 3-year degree that you slowly, get yourself into it, and you need to uh, take your time. Don't rush this thing. Don't rush this thing. This thing is very complex, and you're gonna have losses, and losses are gonna discourage you. You might lose your money. You might, do something stupid. I mean, there's a lot of room for error. I recommend you guys, if you're just starting out, keeping a small account and trading like part time, once or twice a week, until you get comfortable, and until you like your setups, and keeping that job handy, and also buying my course and being in my chat room and watching all my videos, so you can pretty much know like what I'm thinking, what are the top traders thinking that time, and getting a feedback on if that aligns with what you're thinking as well. Because if it does, if two people agree on the same setup, if two people agree on the same setup, it's definitely going to be a setup worth putting your money in and profiting from. That is about it. That is kind of like how my PNL has been looking in the last 3 weeks of trading. I'm very happy with my PNL. December 2024 has been an amazing month for me, and is probably the best months out of my whole career, I believe. And trying to we have Christmas next week, and then the New Year, and then it's probably gonna be a lot more plays, and probably I might even size up even more. I don't know. We'll have to go day by day. But thank you guys for watching my stream. It's been a pleasure talking to you guys and explaining to you my thought process. Like I said, make sure you read my terms and disclaimer that not everybody, success is not guaranteed, but if you do manage to, listen and study, you will be consistently profitable, like I have, multiple days in a row, sometimes multiple months, if not multiple years to come. Other than that, it's been a fun time chatting with you guys. I hope I'll see you again. And make sure you hop into my private Discord, link in the description below. Make sure you hop in my paid Discord and see me trade every day. And put your email. Sometimes I release a pre-market watch list so you can stay in touch with me. All the links are below. Make sure you follow me on all social media, and I'll see you all in my next video. Make sure you give this video a like as well and share with your friends. Other than that, see you all later, and happy trading out there, guys. Peace out. What's going on, traders, and welcome to my stream. In this video, we're going to talk about top day trading mistakes to avoid. I decided to make a really nice slideshow of the top day trading mistakes that I struggle with, and you probably struggle with as well. As probably this webinar is probably going to be around 30 minutes. I put a bunch of slides together, and we're going to jump right into it, right? Top day trading mistakes that you might avoid. Anyway, this is kind of like my setup here. Actually, you can see in my monitor how my setup looks. I actually focus on about two charts over here. I actually updated, like I said before, my laptop. I'm currently running the newest Alienware 4090, and going through this is kind of like my setup. I look at around 6 stocks a day. I try to trade between 6:30 in the morning till about 11, unless it's the first day of the week where we have a lot more volatility and sometimes there's no trades to be made. This is kind of like my setup. I got the IKEA desk, really long. Actually, I have the new Alienware now, wireless mouse. Gotta keep myself upgraded, and I got the nice camera over here. So we're gonna go ahead about so what I do specialize in, and I specialize in day trading small cap stocks. These are the most volatile stocks in the market. Stocks underneath around $10, under $10, and preferably over 50 cents. So like between 50 cents and like a dollar, that would be probably be ideal. So day trading can be a very highly profitable business. Day trading can be a highly profitable strategy if executed correctly. You can see that we had many days in which stocks have moved over 1,000%, and that's a lot. Actually, the top mover moved 2,100%. I think it was 2,200 something based on my data. So I have not seen any other mover that moved beyond 2,100%. But you can always surprise me. You never know what tomorrow might bring. So we're gonna go ahead and talk about. So this is why. So day trading can be highly profitable strategy if executed correctly. One of the top movers moved 21%. So trading around the holidays right now, we have around 10 days left. Actually, we have around 10 days left. Let me put it somewhere here, or try to put my face somewhere here. So Thanksgiving was actually this slide was from last year. I was talking about Christmas. There's a lot of opportunity, especially in the second half of December as we get closer and closer to pretty much Christmas. S- Um, you know, Usually sometimes you have one opportunity per day, sometimes two, and sometimes starting with probably Christmas, you're probably going to see yourself having five or six opportunities um, a day, which is pretty crazy to have that many opportunities. So once you have a cold period, like right now we're going through a cold period. It's actually December 14th, so it's probably going to be another week. What happens during this time is that during December 14 and December 24th, people are out buying their products, buying their gifts, and pretty much they're getting ready for the new year. So what you want to do is, you want to trade less during the cold period, smaller size, and B setups and C setup sizing. So, once you get into the hot season right over here, which is Christmas, New Year, maybe January, February, maybe some March, you wanna be trading full time, 7 a.m. till sometimes 11, I think a.m. I put here. I think this was a typo. So 11 a.m. to a minimum, A plus setup size. So I'm gonna go over what an A plus setup is. So moving on to some of my rules that I have right now. So over so before we were talking about what kind of market we're in. Right now we're between a little cold market and a little hot market. So you have to really adapt because you have to be have the energy to trade. Right now it's slow and choppy, and then it's going to become hot and fast. So what kind of mistakes are you looking for? So I examine the market. Are we in a hot market? Are we in a cold market? And then you got to come in with a battle plan. So as you probably are not already know, a lot of you guys are victim of over trading, and you sometimes over trade a ticker. The way I've been able to combat this is like if I have a if I'm going through a rough streak, one red trade, I ban the ticker. One flat trade, I continue trading the ticker. One win on the trade, I continue trading it. And if I have two wins on a trade, I stop trading it. If I have, as soon as I have a loss, I pretty much stop trading it. That's kind of like it. Maybe I'll trade it once, and then this and like the first time is flat, the second time is a loss, I stop trading it. um or maybe like First time is red, and let's say I tried a second time and that is red, I just ban it. Ideally, you don't want to trade it more than 2 times, and you don't want to lose on a stock more than 2 times. Because if you do lose more than 2 times, it's most likely that you're out of sync with the market and you're out of sync with the stock. So there's no reason for you to fight the stock because you'll just bleed yourself a big loss. So this is kind of like my basic rules of how I've been able to survive all these years. Very basic, nothing too complicated, but you have to stick to them. You cannot let fear, greed, emotion, and so forth get in the way of this. And of course, you got to have your maximum loss per trade as well. So moving on, ignoring stop losses. Obviously, when you have a red trade, you're gonna have to respect your stop losses. My stop loss are usually between 2 to 400, sometimes 1,000, sometimes more than 1,000, depending on how what kind of market and how great the setup is. Is there an A setup, B setup, or a C setup? So if you don't, if you have to respect the stop loss no matter what. That's for sure. If you don't respect it, you might as well just choose another career because you're gonna be stopped out a lot in this career. Common day trading mistake to avoid. You can see so here that this is part of my course. I have a 7-hour course in which I talked for 7 hours. This is part of your membership. When you sign up to my website, you can go through 7 hours of me talking about the rules. And you pretty much have, I pretty much know myself. I have an overachiever side effect. I keep myself busy with trading and I keep myself busy while also going to the gym. And what I've noticed is sometimes when I work out like 4 days in a row, um, I pretty much take one big loss. And it happened actually last week, just because I'm working out and then I'm starting to trade. It just happens I don't have the mental stability, mental equity, or mental capital, or energy capital, or maybe I don't have enough electrolytes. One or the other. I just sometimes you wake up very tired. You probably already know if you're working out an hour to two hours each day for a extended period of time. You wake up with a big. You're very lightheaded. So the way I've been able to combat this is pretty much try to not blow up during these times. It's very trading is very hard, and there's lots of opportunity every day, but there's you need to pick the opportunities that make you money, and you need to pick the opportunities you're good at. You need to pick the opportunities that you have an edge in, and your edge comes through being on top of your game every single day. So 2 to 4 losses in a row, you need to ban the ticker. You stop trading it. So you can see, so you gotta have a loss per each stock that you trade. Say you have a $200 risk per each ticker you trade. You get stopped out, you lose 200. You get stopped out, lose 200 again. So depending on your size, either it's 200, 400, 700, or maybe it's just $10. Some of you is probably $10, or maybe it's just $50. You lose that much, you pretty much stop trading the ticker. That's kind of like pretty good rules over here. 200, 400, 700, depending on how your account size. You can increase this. You can start with $5 and then go up down up to $100 if you want. That's kind of like the basics of it. So managing your emotions. One of these things that I have problem with is probably fear of missing out. Lots of like these are some of the basic managing your emotions rules that I have. Fear of missing out. As you can see, so in this example, we had a day two continuation. As you can see that this ticker on this day, actually it's a pretty recent ticker. It happened in December right here, 250 up to 450, and we consolidated, and you can see so here at 450 over here, it was a day two continuation. And what happened was, instead of buying it at 450 and having a stop at 450 or 446, because I tend to buy it when it breaks out. So I didn't really have this ticker on my scanner at all. I actually looked at it in another chat room to tell you the truth, or in another somebody posted it or something. So what happened was, I was buying it at this ticker as this ticker broke out. I actually did not see the breakout of 443, and then I chased it at around 480, and then I got dumped on, and then I sold it at 420. So this is a very good example of FOMO, fear of missing out. You cannot chase stocks. If you chase stocks, you'll probably likely die. But this is a very good example of FOMO. You just missed the 450. You think it's going to go to 5, 6, 10, 20, 200, and you chase it at 480 and they dump on you and you lose money real quick. It's important to be perfect. That means buying the day two continuation as it breaks 446 and then holding it with a flat stop. That's ideally what you want to do. Sometimes you miss it, you give to FOMO, you chase it, and they do a dump on you. So it's very important to have discipline in your game. Moving on to my managing your emotions. This is overconfidence. This is actually a pretty good example of TPST. TPST, this is the rule here is adding to a short. Um, a lot of you guys have not seen stocks go up more than 100% or 300% or 400% or 500%. And what you want to, and what I, and a lot of people, I actually, one of the lead top traders that made, I don't know, like $10 million lost $20,000 on TPST because he continued to add to his short because it fit his strategy. His strategy was to short stocks that are between a percentage wise, like 300 to 500, and TPST was the stock that came outside his, data of information. So I actually started short as well because, not only me lost money on this one, I actually started short as well. I actually started short, I don't know, around 4 or 5, and I also added at like 7. So right here, it should have been done once we reached 8. So this is a simple stock that came up to everybody's radar, came for 50 cents, and then went to $10. So 11.50 to tell you the truth. Very, very, very short squeeze all day long. And I actually added at 7. I had a 5 average, and I eventually cut it off as we were at 7 or 6 or something. I ended up taking a loss with the same guy. Millionaires also do this pattern. They just jump in here and they think it cannot get any higher. They have a strict criteria between 300 and 500% or something, or a criteria between like 700 to 1,000%. They start short, and then stock ends up going, higher than we all think. So I try to use this data. Like, say I'm gonna short the next stock that was at 1,100% because I have not seen a stock go more than 1,100%. And it was actually really funny because actually the next stock that I don't have the data for, it ended up being, a year later I saw a stock go up 2,200%. Like that's 2,200%. So that's like the biggest percentage gainer in one day that I've seen. So just because you think it's gonna go down, doesn't mean it will. It can continue on going up to 2,200%. This is also opportunity as a long, but also a disaster for short sellers if you're stuck on the short side and you're overconfident that you never seen a stock go up more than 500% or 1,000%, and yet this one does. Moving on to the next one, I think this one is greed. As you can see, I trade many tickers, and in the morning, it's very what is it? Very popular for the stocks to release news, and it's very popular for the stocks to pop and pop in the morning. And we don't know if that pop is going to continue or that pop will sell off. In this situation, you can see it broke VWAP around 210 or 215. Most of the stocks that pop up like this fast, they usually hold VWAP and they bounce and they hold and they make some sort of a trend here and then they move up higher. That's ideally what you want to see, but in this situation, the stock just popped and nobody, and it pretty much just dumped back down. So this is not selling a losing position, pre-market pops and drops. They happen actually quite often in the market, more of every day or every. They happen very often to tell you the truth, and you might wonder like, why don't you short these? Because I don't know if it's because it's not a solid strategy. When I see something like this, I try to stay away from them. I don't like fresh news stocks because there has been more stocks that dump than stocks that keep going. I don't like fresh news stocks like this, especially so aggressively 120 to 240. I mean, we just doubled in 5 minutes and then we go straight back down. So this is the very, if you're gonna chase pre-market stocks with fresh news, be ready that this might happen, and you're just gonna get annihilated if you don't know what you're doing. So this is greed. And the next thing you know, uh, developing a solid plan. Actually, this is a very good example. Like you can see that I have different, depending of what kind of market I'm in. You can see that, most of the time I'm able to come in and make 10% most of the time, whether I'm in a bear market, when I'm in a dead market, not really when I'm in bottomless pit market, but that doesn't happen that much anymore. In the bear market, it used to happen a lot of bottomless pit market in which we just sold off to infinity. And but in a bull market cycle of small caps, you can see like these bull market cycle lasts about 3 weeks. Then we have a bear market cycle. You have a lot of sell-offs. So in the beginning, it gives retail trader hope. You have TPST going from $1 to $10, and then they're like, okay, let's buy the next one and the next one and the next one and the next one, and next thing you know, after 2 3 weeks, they just gap up and sell off. So it gives the retail investor for about 1 or 2 or 3 weeks a very unrealistic gains potential. And once the first one moves, which is going to be the best one out of the bunch, which you never know when the first one's going to move, every single stock after that is just going to be less and less and less. So say the first one's like 700%, the next one's 600, next is 500, next is 400, next is 300. It doesn't really happen exactly like that, but most of the time, it's like this. So you gotta have a solid plan. Like I try to trade every day, and when I'm in a bull market cycle, I usually am able to come out with 20, 30% on a trade, and sometimes 40%, and sometimes I do it 3 times in a row. And I did that when I first made my $50,000 win. I traded two stocks, and I bought a stock at $10, sold it at 13, and then I shorted the stock at 13 and it went to 6. And I also bought a stock at $1.60 and it hit 250 in 5 minutes. So I was able to make, on one side 30%, on one side on the downside around a 40, 50%, and then on the upside again around a 40%. So I was able to do that back to back to back to put me up 50K. And we were in a very much bull market cycle. There were opportunities. There were two opportunities. There were six opportunities, but there were two opportunities. And we were kind of in a bear market cycle. We were getting a lot of gaps and craps. That's for sure. Because once the breakout happened, I mean, it sold off. The 160 to 250 sold off pretty hard. So even in a bear market cycle, I'm able to make pretty good bank if I pick the right ones. But they're just gonna be less. They're not gonna be as many. They'll just be 2 out of 6 instead of 8 out of 8 over here. So moving on here, risk management and sizing. This is actually developing a solid plan. Like you probably already know, like there's different type of market. Are we in a bull market cycle? Or are we in a bear market cycle? Are they selling off or are they buying them? And you have to size up. You have a C, B, and A type setup. Obviously, everything in my book. I mean, I have a trade book or course in which I have 10 A plus setups that I have logged throughout 3 years now, and maybe more. And every day I just come in and I trade them and then I log them. So an A type setup, you want to put max size. For me, is around 30K max size, and then a B setup is like 9K, a C setup is like 3K. So most of the time when I show up to the trading desk, I usually trade between a 5,000 to a $10,000 position. And sometimes when I see an A plus setup, I usually trade 10 times as much as I would trade a C setup. As you can see in this situation, my C setup over here is 10 times as much as my A setup. So that's why I'm able to, turbo boost my trading account, because I recognize it's an A setup and then I size up as much as I can, and then I pretty much have a huge gain that pretty much I talk about. So you got to understand like what kind of setup is it? Is it a B? Is it an A? Is it a C? You have to know your setups, because most of the time it's a B and a C setup, and you don't want to size big on them. You just want to take primarily maybe 10, 15, 20% and then move on. And then when you see that A setup, you got to nail it. Uh, Developing a solid trade plan, choosing the right trading platform. So you can see like these stocks pretty much, I actually recommend Trade Zero. Trade Zero is pretty good. And uh, Trade Zero is pretty good. And anytime, and DAS trading platform, you need to respect your stop loss. And what I use with my speed, and I use DAS Trader as well. I use Control X over here, and sometimes I just use the buy and the sell button. I use my hotkeys to sell 3 cents below the bid. I also have a panic button. I use that. Control Shift Z for me. I have a max loss per ticker mental. And what Trade Zero does, you can pretty much set your maximum loss per day at a broker level. But sadly, this is only during market hours, 9:30 till about 4 o'clock. And you can put this 100 to 200 to 300. Sadly, you cannot have a max loss per day uh, during pre-market. It only works when you're pretty much during market hours. So I do recommend Trade Zero and any type of DAS trader to be able to get out, because sometimes these things they do have offerings like and in the middle of the day. And if you don't sell it or if you don't lock in your profit, you can be down on your position, and you want to have that broker level, stop loss, because they will. I mean, they don't. They haven't really done offering. I mean, they do offering in the pre-market and aftermarket. So you have to be careful of these companies doing that sort of shenanigans. That's why I don't really hold overnight that much. Moving on, research and analysis, tracking data. I have around 10 setups here. What is it? Buy the daily breakout. What is it? Intraday trendline breakout. Pattern news, gap up short, first red day short, first green day bounce, day two continuation, pre-market at 7 a.m., VWAP reclaim at 7 a.m., short the daily resistance, zombies, and this is kind of like my pretty much my book that I go through. And what I did was for the last 3 years, every single day I traded a ticker. I took a screenshot and I pretty much put it in a separate, in a separate folder in which I track multiple setups just like that. So I can so it gives me at least 20, 30, 40 different setups identical to that, so I can pretty much base my risk and try to what to expect, where to buy, how to sell, what time of day was it, how was I feeling that day, what kind of market we're in, hot or cold, and so forth. So you have to track all this data. I have around 10 plus A plus setups track for that data for last 3 years, I think, from 2020, 2020, I think. 2020, right? That's when I started tracking all this data. So the road to success in trading, actually, so what do you need to make money in trading? First off, you need the stocks to move. You need a hot market. The reason people were making a lot of money during the Bitcoin thing was Stocks were going outrageously high, and they went very high. So you need a hot market. We were in a bear market. It wasn't so hot. But if you study during the bear market, you'll probably be well off into the bull market because you'll know exactly what to do. So you need stocks to move in a hot market. You need money. First off, as a trader, to not only feed yourself but also to study and to track the data. You need energy. You need to be well rested. Actually, sometimes when I sleep only 6 hours, or sometimes when I have accumulated fatigue, say I have not slept more than 6 hours per 4 days straight, I come in and I'm unable to trade. So it's important to be well rested. You need to have experience, like studying. You need to have, you need to, after you take a bunch of losses, because most of you have taken losses, that's why you're watching these courses. You're trying to educate yourself. You need those losses. Those losses need to heal, and you need to learn from them, and you need to be in the market after you took your loss. And even if you're not trading, you need to be in the market and watch the market and plan the market. It takes time to get in the flow of the market. Next thing, you need to eat, and the last thing and most important thing, you need to have, you can't have pressure on your mind to make money. As soon as I feel like there's pressure for me to make money, I already know that my next trade is going to be a loss. This career or this trading business, you cannot really every like some other trader has said, every profit that you make is a gift. Market doesn't owe you anything. Market can change at any time, and a lot of you guys got a wake up call in the bear market. And You cannot have a pressure on your mind to make money because sometimes there's no opportunities, and if you pressure yourself, you're gonna just make the bad opportunity and bad decision. So this is what you need. You need discipline, and you need patience, and you need to be in a hot market. You need money. You need to be rested. You need to study, like what I have been doing. You need to let those losses heal. Need to be in the market even if you're not trading, and you need to eat, and you cannot be pressured to make money. That's really how you're gonna come out on top, trying to build your small account. So the road to success. So first off, you got to understand that most of you have experienced some kind of loss, and if you have not yet, you will. Losses are just part of trading and part of life. Losses are everywhere in your personal life, family life. Losses, I mean, like Buddha said, life is suffering, whatever it is. Trading, what is it? Trading, personal life, physical life. You always want more, and the more you get, the more you want. Uh, Anything you get is not enough. So you're gonna have frustration, you're gonna have anger, and you're gonna have pain. These are just normal side effects of failing at anything in life. You might fail at your job, you might fail at bodybuilding, you might fail at dating, you might fail at your diet, you might fail at your, family related business. You might be failing at, you might have a lot of frustration, anger, and pain in different subjects of your life. And my favorite guy was I don't know, this other guy, Can't Hurt Me, by some book that I read. I don't remember his book. I don't know what I was reading his book was actually quite interesting. What was it? David Goggins, Can't Hurt Me. That's what it is. There it is. And I actually have a David Goggins. So it's Never Finished and Can't Hurt Me by David Goggins. So a lot of people, as they reach frustration in their life, they have suicide, they have drug addictions, they have depression, they have failure, and a lot of them have the victim mentality. I've actually experienced one just recently, that he's a victim for wanting to fix roofs, and he wants to work 4 hours to make $1,000, and after the 4 hours, he talks bad to his boss, and he does a terrible job. So I had to fire him. So he had a very much a victim mentality. So he, so in case of so try not so while you have this frustration, anger, and pain, you can go down the dark path. You can suicide, addiction, depression. So you can just what I did with my frustration and anger and pain due to the time was when I was unsuccessful. I tried to get some, day trading skilled, started this business. I got some combat skills. Combat skills are always good, regardless of who you are and where you're from. It's always good to take care of yourself, be able to fight five individuals at any time, and being ready just in case the shit hits the fan, because it always does and it always might be. So you always got to be ready for the worst. You got to get muscles because eventually over 40 you lose you lose muscle. So it's actually all this stuff you have to use all this, frustration, anger, and pain and build it in something positive. Wherever you decide to do, choose the positive route or the negative route is all up to your individual choice in life. Most of you will choose the easy path because the hard path is actually pretty damn hard to go on. It's very hard to pick uh, going to the gym or fighting or studying the markets when you're continuously failing at it. Um, so it's very hard to continue on. Like even now, since I'm trading for so much time, I have to keep going regardless of whether you guys choose to join me or not. I'm still gonna keep going on my own path, which is very successful, by the way. So this would be the good path. Choose the good path. Don't choose the bad path. I hope you all choose the good path. I wish you all good luck. A lot of people fail at this business, and for good reasons, because the bare minimum for entry is just the trading account, and you can do whatever you want with the trading account. You don't need any education. Um, you can take advantage of my sale. Actually, we're going through a link if you'd like to join me on my journey. Most of you will fail, but if you listen to what I have to say and you follow my instructions and you trade correctly and you follow my lead and when to trade, when not to trade, and just follow me around and brush elbows with me, you probably have a much higher chance of surviving, not only surviving, but also, bringing in your 6, 7 digits account. 98% of traders fail. You're not special. Um, you're not special. The only people that are special is actually the people that do the work. And if you do not do the work, I mean, you can ride the bull market gravy train for only so long, but reality is gonna kick you in the face very quickly because, the smart money always goes to the people that are smart. It never goes to the people that are, win by blind luck. Or it might go there, but it's not going to stay there. So unless you invest money in your education and invest time with, a professional, you're likely going to have, either A, you're going to lose all your money, or B, you might have some blind luck, followed by, uh, a, uh, losses. Because it's no way you can know so much data and so much information and track so much data by yourself. It's really physically um it's demanding. You have to work, you have to work out, you have to wife, you have parents, you have responsibility, but since I've been doing it full time for the past 16 years, you might have a chance by joining and coming along with me for the ride. You might have a fighting chance. But most of you will not. Be thankful that you came across this video. Trading is very hard and very competitive and very demanding and very stressing, and you and everything that other people do will discourage you to continue on this path. And once you're successful, everybody you know wants to talk to you, and they will influence you with bad decisions. It's this job is very hard. When you're going through struggles, nobody wants to be around you, and when you're successful and you make a ton of money, everybody wants to be around you, and most of them will give you bad ideas. It's a very lonely, demanding business, and you have to look at the numbers. I'm a numbers guy. I see the numbers. I take profits where I see them. I am successful. I make money most weeks, and I'm able to maneuver and teach you my A plus setups, as well as live stream my ideas on a daily basis. This job will bleed out your account. It can become an addiction, and it can also destroy your life if you don't have maximum losses and a good risk management as well. But if you follow all my directions and you watch all my 3,500 videos, you will be close to what I am now, and you'll be, on your way to becoming maybe a six-digit earner, and some of you will might actually become millionaires. But until that time, thank you for your time. Trading is a very serious job, and you have to take it seriously because money is a very serious matter. I don't love money. I use it as a tool, as a way to keep score. My house, my cars, my vacations, my traveling, everything is paid off for me, so I don't really make a lot of money by talking to you or spilling what I have to say. It's actually an investment in yourself to join me by using the link below because without me, you will lose your account. I guarantee it. There's so many, so many small things that you might have missed that will get you to lose your account. And it's a very detailed job, and it's much more detailed, not only from a perspective, not only from you know, a logical perspective, like buy here, sell here, but you also have to deal with yourself. Probably the hardest part of this trading is dealing with yourself because you have to be technically your own psychologist and be like, did I perform well that day on a logical sense? Even though your emotions might say negative, you did perform well. And sometimes taking a loss was the good decision because that was the best decision. And that's about it. This is trading the financial markets is about creating. We're creating trades, and we're examining past performance to make future decisions. So it's about creating. When I go to trade, I create. I create ideas. Ideas take time, they take effort, they take studying, they take practice, and I'm not going to share with you these ideas at all uh, on any free platform because it just would not be fair. Anyway, but you could always take advantage of my, my sale. My sale is available for about 10 more days. And, I'm not trying to scare you. I'm trying to give you a direction for your money to go before your account goes to zero. Because most of you guys starting out, your account will go to zero. And if you do not invest time in your vacation education, it will go to zero for the 9 out of 10 of you. But it's just statistics. I'm not being mean. I'm not saying you're better than me. It's just statistics. It's just, you have a very high chance of getting sick drinking rotten milk. Everybody does. There's no question about it. Rotten milk will get you sick. I'm not being mean. I'm being realistic. So invest in your education. I really do hope most of you will succeed at this. I mean, trading is amazing. I'm able to make my own schedule, travel the world, be in different countries, and not have a boss, and actually not read comments. Actually, the best part about my job is not reading comments because, YouTube is full of shadiness and pretty sketchy activity. Not a lot of people want to, have a great idea of how to structure their, negative emotions, and most of you guys are just plain stupid. I'm not saying you're stupid. I'm saying that most of you guys are uneducated. Most of you guys, I believe, are smart if you educate yourself through education. I mean, you're not stupid, you're just uneducated. I'm not trying to insult you, it's just you have a lot of knowledge that you don't know. And that knowledge that you don't know will bleed out your account to zero. That's just the reality of it. So invest in an education system or a platform or somebody that's been doing it for a long time, and see if you can take advantage of the sale. If not, I'll release another sale probably next year. If that works for you, fine. If not, I'm off my way. I had a huge gain, and looking forward trading this December and traveling the whole world. That's been a fun time chatting to you with 41 minutes and counting. And I wish you all a great Christmas and amazing New Year. Peace out. What's up, traders, and welcome to my stream. Today is we're close to the holidays, and we have the holidays going up for us. And I decided to make a nice presentation of how to find the best day trading stocks. This is a pretty good presentation. Is how I find the best stocks during the holidays and every single day, and my criteria and my checklist and everything in between. This is a nice guide for you guys, beginners to advanced. Actually, this is probably going to help a lot of people answer a lot of questions. And this is a nice, I don't know how long it's going to be. I'm just going to try to keep talking. So, how to find the best day trading stocks to trade that make money today. This would be my setup here. I've been trading for around 16 years. The way I trade is usually looking at six different screens, six different charts every single day. I actually upgraded my Alienware R2. I have the 16-inch with the 4090 right here streaming from it. I really like the 4090. And I really like the Alienware laptops because they have very many ports you can put in the back, and you can hook up, like I'm hooking up like three screens. So I highly recommend the Alienware X16 R2. That's what I'm using right now. So this is kind of like my setup. I also have a 4K monitor for my travels, and this is a very nice presentation of what I look at every single day, starting with 6 in the morning, 6:30, especially in a hot market. But now we're in a much colder market, so we're gonna go ahead and talk about myself and how I find day trading stocks. So we're gonna go ahead. So what exactly do I do? I specialize in small cap securities. Understanding the day trading landscape. So what do we trade? I trade small cap companies. These companies are very volatile. They have a float underneath 20 million, market cap underneath 30 million or 40 million. I try to stay away from institutions, and I try to trade insider stocks, and I also try to trade highly shortable stocks. That's something I like doing. And let's see if I have the light on so you can see me better. So I like to trade small cap stocks. This is something I've always liked doing. This is my bread and butter kind of, and they're very moody, very seasonal, very volatile, and they you can make a lot of money very quickly in a very short amount of time. So this is the highlights of the potential risk and reward. First off, the risk. If you buy them and you hold them forever, I mean they can go from $1 to triple zero ones. They can do a reverse split in which they pretty much give you another double your shares, and then they add a zero to their share. If you're at 0.002 and they do a 100 to 1 reverse split, now the stock's at $1, and they repeat the process. I mean, these companies, if you hold them for too long, they will go to zero. Majority of them have been going to zero, and the dangers of holding them for a long period of time is that they will sell off. So if you buy them, they will pretty much can if you hold them and buy them, they will pretty much go down forever. But and if you short them and you're in a hot market, these securities tend to go up sometimes 2,000% in a day, like from $1 to like $20 in just one single day, and and you can pretty much blow up your account. So that's the risk. If you're shorting, you can blow up your account and you can owe the broker more than you have in your account. Your reward. If you understand them, you'll be able to make 10, 20%. Let me move my face here. If you understand them, you'll be able to make 10, 20% with ease. Sometimes you'll be able to even have a 40, 50% gain, especially in a hot market. And your reward is, the most volatile stocks in the stock market. These are, pretty much you look at your top gainers list, see which ones are moving, and these are the most volatile stocks in the stock market. Um, so let's proceed on to slide number two. So these are your risks, and these are your reward. So emphasizing the importance of a solid strategy and risk management. As you know, I pretty much started a course. I've been working on a course for about 2 years now, actually 3 years since the bear market started. So, I have a booklet in which I pretty much took every single chart that I traded that day and I pretty much put it in separate categories. And based on, the categories here, you can see that, so far I've come up to about, 5 to 10 strategies, shorting and buying them, having a strategy. Like some of my trading patterns have been, aftermarket with news, beginning of a bull market cycle, the one stock, that's a pattern. Buy the daily breakout, buy the hot chick of the day, choppy Thursday, cold market news, algo spike. Cutting losses is important. Day two continuation. So if I were going to look at this one, let me see how many of these are solid setups because I have to look. So day two continuation, first green day bounce, first red day short, the gap up short, um, intraday trend line breakout, multiple day short squeeze. That's pretty good. Short the daily trendline resistance, right? Pre-market VWAP reclaim, Amazon zombie. So I have about 10 setups that I usually do well. I usually trade every single day from a short perspective and from a long perspective. About 10 setups that I have studied and reviewed, and I have every single example for the past 3 years of those setups, and I pretty much made right now I'm working on my course to release it and pretty much teach you in depth much more about it. I'm not sure how long this course is, but the next course I'm gonna release for paying members is probably gonna be a much more in depth. This is more like an outline, trying to get you to see like what I see in the markets. So you can see, we're gonna start out with, identifying over here, identifying key stock characteristics. So first off, this ticker here is BMR. So the way I identify, the stocks to trade every single day is, as you can see in this scenario here, in the morning, you can see that we had a nice move pre-market. I mean, this is a key indicator of big move pre-market, so volatility. So first off, when I sit down at my desk, say 6:30 or 7 o'clock, I look for a big move. That's very important because if I have a big move, I'll be able to make a decision whether I want to buy it, whether I short it. I need stocks to be moving. You can see this morning the stock at 7 o'clock moved from like 250 to like 650, and most people think that's over, and that's not necessarily over. It could be a buy. And you can see in this scenario, I think the day of BMR was a day that, this stock had news, released video codec or something. So in this scenario here, the way I identify stocks is I look for stocks that move pre-market. I look at my pre-market gap scanner, which is over here. This is kind of similar. It doesn't say midday percent gainers. It looks like midday pre-market scanner. And I pretty much, it might seem a little bit confusing to you because I look at it every single day, but primarily I want to see which one has the most relative volume. That's important. It's not really that important. Just where is the volume very high. You can see, so in these scenarios it was very high, around 17,000%. That means it traded 17,000% more than it usually does, the volume. So if the volume was 10,000, you multiply 10,000 with 17,000, and that's pretty much, what that volume is, which is 18 million, which is exactly what I said, 17 million. Because usually they don't have more than, let's call it 10,000 average daily volume or something. And then I look at the float, and you can see most of the time I group my float into sections. Dark green is like medium float, lighter green is like lower float, and then I have really, really light green, which is very micro float. And then I have the volume here. I like the volume. Blue is like normal, and then green right here is just light volume. So I really like, how much volume does it have, whether it has light volume, medium volume, high volume. Because if a stocks has, you know, too much volume is no good. If it has too little volume is no good. It has to have medium to low volume, because if it has too much volume, sometimes it gets overcrowded. Then I look at how much what's the percentage of the stock being short, because as you remember, the what is it called, the those stocks, those Meta, not Meta, the those stocks, GameStop and all those stocks, they were heavily shorted, AMC. And then I look at insiders, then I look at institutions. You can see if they're over 50% or 40%, I have them in red. So this is something I look, this is called my gap scanner, and I custom created it for me, especially for me, so I can see exactly, what kind of animal am I dealing with? Because when you're trading a stock, you're trading an animal. It has different moves based on their share structure. So in this situation, you see BMR is 69% insiders. So what happens in an insider owned stocks, the stock goes much higher than I think, and also squeezes the shorts. And that's basically what happens most of the time, what I have discovered. And you can see in this situation, we had a downtrend break right here around 560, went all the way up to 750. So that's, not always is going to happen so cleanly, so nicely, but this is a very good example of a, downtrend breakout here, and, identifying a stock that has volatility. So first off, I definitely look at my pre-market gap scanner, and I'd have them color coded so I can see a very good, so I can see the bigger picture of the stock. What kind of animal am I dealing with? Next, we're gonna discuss liquidity. How much volume was traded in a pre-market. You can see so here that I really don't like stocks that traded very little volume. I like them to have at least, I don't know, 10 million in volume. I like them to have. I never want to be the only guy trading the stock. I want it to be on my pre-market gap scanner, and I want them to be easy to find, because most traders that trade small cap companies, they just open up the phone, they load up their Webull account, and then they look at the pre-market top gainers, and then they look at the first one. So in this situation, it was the first one, so it was pretty easy to find, and I want that stock to be liquid. Next one is, then so the way I trade is very different, very simple and very basic. It's very basic and very simple. What I look at is, I look at trend. I don't use RSI, MACD, all those crazy indicators. I only use basic daily resistance and support, and as well as I use trend lines. trend lines, support, resistance. This is and VWAP. This is the four things that I really do need. Uh, do really do need. So now we're gonna go in a couple of examples of some of my main money makers that I use to make a lot of money. This is an example of making money in the middle of the day, like buying. So what I try to do is I try to combine the daily. This is you can see so here in the daily over here, and on the right is the pretty much intraday on the 1 minute. So what I try to do is I like to combine two things. You can see so in this situation, you can see a clear daily breakout of 478. Well, this one is not clean because we did initially break out this level and we came back down. You could also argue that, 525 was a good breakout point in which we hit 7. So you're technically buying a stock that did a daily breakout, and that's really what you're doing. This is actually a pretty choppy example. Usually it just goes through it and then pretty much goes higher, but in this situation, initially went higher, rejected, came back, and then it reclaimed. This is a pretty good example what I do like buying. This is called also daily breakout. Like some of my favorite setups have been daily breakouts, uh, daily resistance, and buying stocks in the pre-market. So buying the daily breakout, shorting the daily resistance, or buying a stock in early in the morning at around VWAP. So in this scenario here, you can see that hollow here, we broke out of this 43 mark, and then we actually went back down, and we held 43 for a while, and then we had this squeeze candle that led up to $100. So it broke 43 and it hit $100. And I think I was live streaming. This is called a buy the daily breakout. So this is a pattern based on my humongous memory bank of patterns. You can see so 43, 43, 43. So once it breaks 43, you have a very much likely the sky is the limit. That's kind of like the mentality here. Another one, let's move on to the next one. This is another example. WHLR. We pushed through 132. We came back down. We hold 132, and then we come back. You can rebuy at 160, 150, and it hits $2. That's a very 30% gain in just a couple of days. This is more like a midday. Most of these two are midday breakouts. So I like to buy day pre-market breakouts. I don't think I put any pre-market breakouts here, but I do have a couple of them. But these are a daily breakout patterns. Another one. These are kind of like some of my favorite ones. Technical analysis for stock selection, support resistance. You can see clearly here that HTOO. We gapped up around, I don't know, around 7 o'clock. We gapped up around 3, and we came back and we hit this 470 line. As you can see, I drew a couple of lines here, and then we hit this level, and it was also a confirmed rejection. And what you do is you want to go short it, and then what you want to do is cover at the market close or when you have a gain of 30, 40% at least. These are some of my, this is called a gap up short, and also you can pretty much do a gap up short combined with a daily resistance short. So these are, I'm giving you three of my favorite setups so I can get you started to building your account or your small account and and these are like some of my favorite. This is shorting the daily resistance. This is another example. This is actually a very clean short example, as I shorted RSLS around 19, and then it went all the way up down to 12. And then pretty much this was a little bit choppier because I did because we actually came from 11, we hit 21, we came back down to VWAP, and then we came back up to 21. So a lot of people thought we're gonna go to like 40 or 50 or 30. They were nervous to short. I went ahead and shorted, and you can pretty much make $20 to $13. This is a short the daily resistance pattern. And you have to understand like not every single ticker is going to be a short. You have to understand like are you in a hot market? Are you in the beginning of a hot market or at the end of the hot market? You have to get all these situations. But this is my second favorite setup that I do have here. So I can get you just started or trying to get you a taste of what you're going to be doing. This is another example of short the daily resistance. We came up to 704 in the pre-market from about a dollar. And then you can see so here that you can pretty much short at 7, risking off the 8. So you risk a dollar and you pretty much make, $4 a share on the downside. So it has 1 to 4 risk reward by shorting it at 7, risking off 8. Uh, because in this situation, I don't think anybody got any short here at 774. But you can see clearly that 772 here was the resistance area for the stock. So you try to get yourself, you first you watch if it rejects, because sometimes it just flies through it. So you wait for it to reject and then you add into your short. That's how I actually played that short. So we talked about buying the daily breakout, buying the daily, shorting the daily resistance. Now we're gonna talk about most of my setups that I do nowadays are pretty much I buy stocks as they reclaim VWAP. As you can see here, Jasper, this is an example of what happened in January 2024. We had Jasper here. I think this was December 24th. Last year, we were in 2024 at the end of the year in December, and this was in December 2023. So this was a year ago. So I'm sorry. So this is a typo. This is in December 2023. So Jasper came up here, and we had like a dollar, and then we had a VWAP reclaim at about a dollar, and then in this situation, you would combine, the round number mentality. It breaks a dollar and then it holds a dollar. You can see so here it breaks a dollar and we hold a dollar. And then it also what coincided that dollar, it coincided also with VWAP. So this is a nice example of buying a stock with news in the pre-market with around VWAP. And then what you do is try to hold on to it as much as you can and try to take gains as it goes higher and higher and higher. This is the most abnormal situation I've seen so far. A stock going from $1 to $10 in a day because this stock eventually hit, I think, $4 in this situation. It hit $4. So from $1 in the pre-market to $4. I mean, these are, epic opportunities that happen in a very hot market, and you need to understand this setup. So once you have a stock coming up here, with news, you try to buy it as it reclaims VWAP. You put your stop somewhere underneath it, and you try to ride the trend. This is another example of a VWAP reclaim right about here. This is VVOS. Stock had news in the morning, and this happened in January. As you can, this has also happened in December. So you can see in December and January are pretty hot months. This happened also on December 24th. So this is what happened last year in December 24th. So you got to know like what's going to happen this year. So you can see like the stocks were very active, at the end of the year. So we had Jasper going up from a dollar to 4, and then we also had VVOS going up from a dollar to $3. And this happened also December 24th, I believe, 2024. We could also, so you can see that once it reclaims VWAP around here at around 120, the stock pretty much hit $3. So that is impressive, and it also held a dollar. So that's a beautiful long. The next ticker we're going to talk about, this actually happened in January. I mean January at the end of January. You can see so December is here. I think it's December. I don't know if it's January. It's around the holidays anyway. So you can see we pop up and then we have a VWAP reclaim and that's actually where I bought it at like 450 and we hit like 550 and then it hit 650. So you can understand that 450 to 650 it hit around, 50% in a very short period of time. This is a common pattern that I look for. Wait for a stock to pop up and then I look for it to VWAP reclaim and then I try to go long as it makes a higher high. That's a pattern I've been doing because some of them just don't recover. Some of what happens to these stocks, most of the time they just go straight up and then they come back down and then if they don't hold VWAP, they lose VWAP. they never come back, and if VWAP becomes resistant. So as long as the VWAP is holding, you're all good. So in this situation, it hit somewhere around here. So the long was around 430, and we hit 650. Very nice trade. Another example of a VWAP reclaim, you can see SPBR. This also happened in the beginning of last year, or this or last couple of weeks of December. You can see, so we popped up around 2, and then we actually hit like 280, and at the end of the day we hit 340. So from 2 to like 340, there was an immense amount of opportunity here, around 60% of trading this ticker. Um, this is a very good example of what you have if you have a very small account to your name, like how to get yourself a little bit situated here. I'm gonna move this to the side. You can, a lot of you guys have a very small account, and I understand you're trying to make money in your first year, which is very difficult, or maybe second year, and you possibly could be losing consistently. Uh, if you have 1100 to your name, this is what I would do. I would only trade between 7 to 8 a.m. to 10:30 each day. I would try to take base hits, 10% or more. I would absolutely avoid midday trading, and I would try to have as much as I can a maximum loss per ticker, or don't trade the ticker if you're losing more than 2 times. If you're more experienced, I advise to, if you have a stock running more than 150%, to go on the backside, but try to avoid the first green day. If maybe you want to short a stock going up 150% on its second green day, that's a very, very money shot. Um, Basically, what you're going to be doing if you have a small account, try to focus on, this is my criteria of some of my best criteria right here. A low float underneath 10 million in float, a clean chart, a news contract, NASA, Tesla, Apple contract with money, stocks gapping up in the morning like 70, 80%. And we've just finished a cold market, and now we're going to a hot market. What you want to do is to try to trade the one mover that's moving, or try to trade the stocks in the pre-market as much as you can, because that's when most volatility happens. Even if a cold market, sometimes most of the volatility happens in a cold market. Try to watch the markets as much as you can, and take notes, and look for low floats underneath 10 million, clean chart, news with contract, NASA, Tesla, stock gapping up 100% after a very long cold market. I mean, these are the things you want to be doing. And take one base hit, take base hits, but try to sell partially. I always take some profits out when I have a 10% gain, just because I don't want to have no profit in a cold market. But some of these trades, some of these stocks, if you're in a hot market, you can hold them for 20, 30, 40, 50% sometimes in gains in a day. I mean, this is a very home run opportunity, but they're happening, and they're, as you can see it in many of my slides, very much possible. The Holy Grail pocket aces. Like, I mean, what is not a good stock to buy? It's actually a good stock to short. Actually, the best stock not to short is the best stock to buy. Like, no shorting anything with a major PR, like Walmart, Amazon, Google, Facebook, Apple, or now Tesla or Nvidia. You don't want to short something that, you never want to short a stock that has a contract. Like, say they received $2 million, $3 million, $4 million. Actually, those are the best stocks to buy. Also, whenever they have new news that they have money, it's important. Like contract, deal, agreement, whatever is like 5 million in the news, $2 million in the news, $10 million in the news, something outrageous, 20, half $1 billion. I mean, those are stocks you want to buy. You want to buy them, not short them. Maybe, positive phase two, positive phase one, a patent news. These are like some great news you can pretty much read. So you watch your gap scanner and you pretty much look at the news and then you decide how to trade them. The way I try to trade them in the morning is pretty much look for the, look at them as they reclaim VWAP over here. That's kind of like how they have been working in the past. These are some of the examples that happened around last year in December and January. These are some very good examples here. And keep in mind here, this is a very good indication of this is a practical tips for choosing penny stocks. You understand that market small caps go through different cycles, and there's different cycles in the hot market. Just beware that, for a limited amount of time, say a week or 2 weeks, you're gonna have unrealistic trades or unrealistic opportunities as a buyer because you're basically squeezing out all the shorts that have been making money for the past month. And just understand like these opportunities don't last very much. It might last a week, it might last 2 weeks. I mean, you can see so here that this is the cycle. The buying cycle lasts around you have lasts around two maybe 3 weeks. This is a bull cycle. You have zombies, you have buy, holds VWAP, you have 1,000% movers, stocks that go from, I don't know, 5 to 10, 5 to 20, 5 to 15. That's a hot market. Then you have the bear market cycle. That's when you have to, pretty much take base hits. It's very hard to take base hits because you're feeling FOMO because you saw so many movers, like you saw 10 movers that made an excruciating amount of money, and it's very hard for you to take profits 10, 20%. You need to take profits at 10%. And you need to understand that in this market, most of these stocks will likely sell off. Then, the stock market transitions and potentially a debt market where, maybe one mover, maybe no movers at all. And then it could be, a bottomless pit when there's nothing happening. So these are the cycles that pretty much a plague, and they repeat over and over in the small cap land. And you have to be aware of these to know what to do, where to take your profits, and to not start buying stocks in a dead market cycle or a bottomless pit cycle. You have to understand that. Um, so make sure you're mindful about what kind of cycles you're in. And this is the end. Make sure you hop into my private Discord. Um, Make sure you hop into my private Discord where I stream these plays each and every day. I also live stream on Monday, I think, on YouTube for free, or at least one day out of the week I live stream these examples or me trading these stocks um, on Monday maybe, or maybe some on Wednesday. So make sure you hit the notifications bell in case I post something. But if you like to me to stream and to talk to you on a daily basis, join in the link below, where you can pretty much subscribe and see me in my private Discord with me talking and me trying to plan a ticker and me trying to take profits out of the ticker, or me these opportunities are available for a fee. My time is worth money, and if you like to receive that service, hop in the private Discord. We're doing a pretty much as of right now we're doing a summer sale, fall of 2024 sale. Link is the description below. And this was it. This was my this was my presentation how I find stocks. Hope this video was helpful. Give this video a like and see you all in my next video. Thank you for watching. What's going on, traders? Welcome to my stream. In this video, we're going to discuss day trading volatility. Today is December 18th, and I got a really nice webinar for you guys. What happened today and how to pretty much maneuver the markets. A lot of people don't understand like basic trading psychology for small caps, and this is exactly why I'm here to explain you day trading psychology, as well as show you my profit, as well as show you today's Friday sale. Anyway, so this is kind of like my setup here. Got about three monitors and an Alienware. Actually, I just updated to an Alienware XR2. They trade volatility, the secret consistent gains. So you can see that I have huge gains here in PLRZ short, LITM long, and VRAR long. So these tickers were very much volatile. I actually have another ticker that I'm still going over, but this is primarily what the four tickers that pretty much work out here. So each morning we pretty much wake up and we pretty much look at the top gainers. So in order to find really volatile securities in which you can pretty much profit every single day, you have to look at the pre-market scanner, which is right here. And you have to figure out like, this is trade ideas. You have to figure out like what is the float of each of these tickers. For some of PLRZ, actually I had to look that up. The float's under 5 million. TCBP, the float is, I don't know, somewhere around 10 million. And you can see that, most of today's gainers are pretty much low float. So the way I find stocks to trade is pretty much I look the stocks with the lowest float. And number one, I look for stocks underneath a dollar with lots of volume. And today's stock with lots of volume was LITM. And even though 13 million's it's a higher float than 10 million, which almost is in the medium float section. It's still tradable just because it's a low price stock because it has like 75 million in volume, and you have also looking at yesterday's stocks. So this is kind of like how I find my watch list. Look at the pre-market gapper, look at the pre-market scanner, and look what stocks pretty much moved the second day. So you need to understand like the day of the week. A lot of people don't understand the day of the week, and they don't understand like small cap stocks go through very periods of depression, euphoria, nothingness, depression, nothingness, euphoria. So you have to figure out what kind of day it was yesterday, whether it was euphoria or depression. Because if you're in a hot market, the market will bounce back and we'll have a euphoria type moment. So you have to understand, like you have to understand like what happened yesterday. So yesterday was Tuesday, and there were 5 out of 6 gappers that sold off. Most of the action was pre-market, followed by the market open sell-offs and midday runner Nook. So that's really all you need to know. That mostly yesterday was depressive, but Nook went up like 1,000%. So you have to get a feel of it. So if the market was very depressing yesterday, and it's Tuesday, and you still have 3 more days to pretty much feel euphoria and feel volatility. The stocks in small cap land never remain depressed, and they usually back bounce back the next day. On Tuesday, I tried to buy a couple tickers, and I actually hit my max loss on Tuesday, and I pretty much walked. And today I came back in, and I pretty much nailed it. You can see my P&L here in over here. This is kind of like my P&L. So I hit my max loss yesterday, and I nailed it in like 5 tickers. So you have to understand like what happened yesterday. You can see, so like in the morning you had stocks over here stocks over here opening up at around, I don't know, like you can see $2 to like $3, and then we just did nothing. And then we VWAP reclaim. We held VWAP throughout the day. And then from around, I don't know, $2, $3, we hit like $17. And today we're at $36. So this is kind of like what is possible in small cap land. If you're here, if you're trading, if you're watching these tickers, it's really important for you to be here and trade them and be in a hot market. So Nook went up from, I don't know, after I took my max loss, it actually held VWAP here, and at 30 started grinding, and we got up to 18, which is outrageous to see a stock go up so much. You can practice, buy the downtrend on the way up. I never recommend shorting the first day. First green day is never a good short. So therefore, this was just a basic long. And the higher it goes, the less size you got to put in. So this is what happened yesterday. So now I'm going into Tuesday. Now I'm going into Wednesday, and I'm analyzing each stock, and I'm pretty much understanding like what's happening here. So, as I say many times, what is real news? Real news involves phase two, involves phase one, positive phase one, two, three. It involves contract. It involves company having money. It involves Amazon, Google, Facebook, SpaceX in the headlines. Sometimes SpaceX kind of sells off, which is pretty sad. So in this situation, the news was pretty positive. We popped up at around 7. We had a nice breakout over here at 90, so we push, we come back down, we push, we come back down, and now here we have a nice breakout of 90. And this situation went from around 90 cents up to 120, which is around 30%, pretty decent, 20-30%. But in the morning, I thought this one might go much higher. I don't know why I thought this was much higher. I thought the 35 million is not going to be a problem. And phase two was an important news. I thought this one was going to go much higher. But, you can see a logical trend developing here as you have higher lows and a downtrend break. But sadly, once we broke out of this downtrend, we only hit 134 and we came back. I thought at the open it's going to try to push again, but then you might wonder like, where's your stop? How should I trade this if I'm long? How should I trade this when I'm short? Technically, you want to short it when it, off the pre-market high if you're a short, off 130, and you can see so here that it made lower highs, and you might wonder like, where's your stop as a long? Ideally, if you want to buy it in the pre-market, over here at 90, you want to take profits. Anything over 20-30% is pretty good. And then ideally, you want to buy it again. I actually bought it around 120 and I sold it like 110. So initially, I pretty much made a loss on it. But you have to analyze every single ticker in the morning. So you had 34 million in volume, which 30 million float. This is a float. CGTX, that's the float. Hold on, that's the float right here. CGTX 34 million in float, 67 million in volume, and up 100%. So in this situation, like, where is your stop? You might want to ask yourself, where is your stop? Stop is right here. This is your stop. When it breaks the downtrend over here at around 110, and it has this death candle, you can see that these are all the stops just being taken out. So after that is dead. Like this is your dead sign right here. It just failed to hold the trend. Where my cursor is. Very simple, very basic. And you might wonder where's your long side. Long is over here, and there's another long over here, and there's another long over here. So there's multiple trades to do it. Once you long it as it breaks out, once you long it, it holds VWAP, once you long it, it breaks trend, and then you short it once it breaks the support area. So it failed to support trend line. So, every single day, so there was plenty of opportunity on the upside. You got 30%, and then it bounces off $1, then it bounces 20%, and then the downtrend break 115 to 134, that's another 10%. So there's a lot of opportunity in small caps, especially this one. And I mean, most of the money was made long and in short. If you were shorting 120, understanding that 34 million is a pretty high float and it might not go any higher. But I thought this one will go higher, but I guess I was wrong. So sometimes they just flop like this. People just don't like 34 million float. They're much more excited to trade low floats, which I'm gonna go, and low price stock, which I'm gonna go into the next slide. So you can see so here that we also have another ticker here, another pre-market runner called LITM. This is a pretty nice LITM. So people either trade low price stocks underneath $1 during the holidays, or they trade low floats underneath like 5 million in floats. So they look at the top gainer, and you can see so here that LITM was was pretty much on the pre-market scanner. So, the top one, two, three, four, five, six stocks, seven stocks, all made significant moves. So you have to take the top six stocks and put them on a separate screen. This is the reason I have three monitors and I look at eight stocks in every single day. So you have to understand like where's your long, where's your short. But ideally, you want to take all the pre-market top gainers and put them on a separate screen. So now moving on to the next ticker. The next ticker is LITM. I actually bought this ticker around 55 in my private Discord, and it read pretty hit 75 in like a very short period of time, like 40%, and I took it all off at 75. So I made a huge gain on LITM. I'm not sure how much I made on LITM. LITM here I made around a 4K profit, and actually this is my leftovers. Because I initially bought it at 51 and I sold at 75, and this is the leftover size that I had left. So LITM was a great long, bought it at 55, got out, and then it actually came back and then I sold the other. So it's a pretty clean pre-market breakout. I don't really like buying these as much. I would prefer having them with news, but sometimes when we're in a hot market, we just break out that level 55 and we just keep going. So, and in this situation, you can see this ticker actually VWAP reclaimed during the middle of the day of 50, and we hit 80. So, lots of opportunity, lots of volatility, lots of I mean, these are volatile tickers. I mean, this is what you want to trade. You want to trade CGTX in the morning. You want to trade LITM, and then you can see so here that multiple times you can pretty much buy it in the pre-market around 8, because it had some huge range, and of course I nailed this one. And you have my buys and sells in the private Discord, and you can get access to my private Discord. Link in the description below. We're running a sale. And 55 break, we hit 80. Beautiful. And then also VWAP reclaim hit high. So focusing on like 5 tickers in a day is probably a lot of work for most of you. For me, it's all right. As long as I respect usually my max loss per ticker, I end up bouncing back very quickly and coming in on top. So LITM 14 million flow, which is a low float. I mean, for a 50-cent stock, it doesn't really. So, low floats like 3, 4, 5 million, they're usually $2, $3 priced or higher. But since this is a low price stock, the price is like 6 times lower, and the float is probably 6 times lower. So if the price is like 50 cents, you just multiply the float by say a 2, 3 million float, and it comes up to 15 or 16 million. So it's a low float in its sector. This is a small cap, low priced, low float. And for you, some of you, 14 million, you might say it's a higher float, but it's not, because it's a low price stock, and it takes more money to get in there to move it. So that's why the volume is higher on these. So plenty of opportunity on the long side, and actually I don't short 70-cent stocks, but if you do, let me know which broker you use, because I like to know. Moving on to, actually, this is the stock that I actually made the most amount of money. This is the money maker of the day. So actually PLRZ, this was number one from pretty much pre-market watch list. You can see so that PLRZ was number one on the pre-market watch list around 8. And this ticker had a beautiful downtrend break right about here at around 260, 270, and we hit a high of around 450. Beautiful, 270 to 450. That's beautiful. That's around a 40% gain in just how many minutes is that? 1, 2, 3, 4, 5, 6, 6 green candles. Beautiful in 1 minute. So that's one trade, which is called a nice intraday breakout over here. And then you have a double top. You can short off the pre-market high, which initially I didn't want to short. I actually wanted to go long because I thought it was going to turn into a nuke, which is nuke is right here. You can see nuke right. Where is nuke? Nuke is right here. You can see Nuke here push towards the pre-market highs. You can see so here Nuke yesterday pushed into the pre-market highs, dipped, held VWAP, and then went to the rocket. So I thought initially PLRZ is gonna go the same way. It's gonna push, it's gonna hold VWAP, and then off to the races. So you can see so here that since Nuke held the VWAP, see Nuke yesterday, see Nuke, we pushed right over here. We came right into VWAP, we held, and then we rocketed from like, I don't know, 250 to 18. So once I saw, so we push, we came back to VWAP. This is where I bought, and this is where I sold. So I actually bought it at 350 and sold at 4. And I actually didn't missed it at 270. And I actually bought it at 4 and we hit 450 and I didn't take it off. And then I saw this wick over here. So it's a short. So now I'm actually short on it. So it gave a lot of opportunity. Like you have this downtrend break, 270, it hit 480. You have a VWAP bounce, which you can combine that with Nuke yesterday, bounced off VWAP. You can buy it, you can sell it. Then you have a downtrend break, breaks 4, hits 450, but it just dumps. Then you flip short. So I actually flip short around 360, and I'm actually holding, still short. I'm actually still short on it. You can see, so I'm still short. PLRZ around 360 over here. So beautiful price action. You can see that every single ticker, CGTX was a low float, had amazing range, pre-market and sadly a market open. LITM had a lot of range in the pre-market and also had a lot of range in the afternoon. Number 3, PLRZ, amazing range. A downtrend break, a double top, a VWAP bounce, a downtrend break, a failed downtrend break, and then a short. Like from that 360 short, we went through like $3. So you had like 5 trades in this ticker, just this ticker, just one ticker. That's the way I saw it. 5 predictable trades. Beautiful, beautiful opportunity here. And the next ticker, we also had VRAR. VRAR is a pre-market breakout of 250. Actually, you can see that pre-market was around 240, and we broke 240. And actually, I bought 240 and initially lost like 5-10 cents, and then I rebought it at 250, and then I pretty much sold it at $3. You can see my trade here. There you go, 240 to 250 right here. To 290. Actually, I didn't really sell over 3 that much. I should have sold a little bit more over 3. So, I mean, these are the setups, and this is another stock. This is VRAR. VRAR was around a 12-minute float, and it's just a pre-market breakout. It's the same thing over and over again. As long as as long as you hold your stop losses and you trade the price action, you will be all right. There were like 4 stocks today, and actually there were 5 stocks today. 5 stocks were trading today. That's how busy I am right now. Of course, I'm here to make my million because I'm usually how I am. So you had Nuke day 2 continuation, high of the day breakout. You can see so yesterday's high was 1763. I thought initially it's gonna sell off because we were opening up under, and I thought it's gonna sell off. But right as the market opens, we came into the 1763, and we pushed way over here. Like I don't like stocks that gap up close to yesterday's high to short that because they just tend to continue higher. And in this situation, the stock gapped up, almost over yesterday's high, and we pushed to around 220, and then you can either there's two options here. Either A, buy it as it breaks yesterday's high, which is 1763, or buy it as it has an opening range breakout. You can see so here the high is like 21. So as soon as it breaks 21, you can buy it, and then we hit 34. Just a very short opportunity. And after that, I mean, I tried to buy the VWAP bounce, but we weren't pretty that close to VWAP. So we had like 5 opportunities today. Very, very, like yesterday we had 1 opportunity and most of the stocks just sold off. And today we had 5 opportunities. Like, see, since I examined the market, I understood that, 5 out of 6 gappers from yesterday sold off. So yesterday felt very depressive, and I took my max loss and I left, and it was very difficult because I was buying a few of them and I was just getting stopped out. And it's important to have a max loss per ticker or max loss per trade, and not continue into this downward spiral. Like if you have the idea of the stock wrong, and you have in that day you just feel like everything you do just goes against you, maybe you're just need to take your stop loss and move on. And today, it was a bounce for the small cap market. You can see Nuke in the midday, you can see CGTX in the morning, you can see lid in the pre-market, you can see PLRZ, you can see VRAR, and you even see Nuke. There were so many opportunities here. I'm having trouble staying awake, or um, having trouble profiting from all these tickers. You can see that right here I have like 3 tickers, and one of them is a 7K 8K win in PLRZ. That's like my favorite because PLRZ gave like tons of opportunity. A long, a short, a long, a long, a short. It's just look, PLRZ. It's just a day trader's dream right there. Beautiful range there. So that's really about it. Try to take the meat of the move, more than 50% of the opportunities that were giving to me. And this is pretty much it. This is the end. This is how I profit on a Wednesday with the stock market. This is how I profit on a Wednesday with the stock market. In the small cap market is very moody, and very volatile, and very, you have to have rules, you have to have stops, you have to know where you're buying them, have to, you have to be very disciplined with the tickers. You have to be very on top of your game at all times. You have to respect your stop losses, and you have to come in with a plan and then execute that plan. A lot of people come in on the wrong day and they execute the plan and just hope and they hold on. That's not something you want to do. Actually, I think I'm like right now I'm working on my cardio and working out. Amazingly, as you can know, we've been in a bear market for like 2 years, and then the third year I've been traveling this year, and I've been trading out of country. So I see a very, very, very nice comeback to the markets. I mean, we have more plays than we have had last year and last year and last year. So we have had a lot of opportunity just in this month alone, like 5 tickers per day, then 1 ticker a day the next day, then 5 tickers again, and the next day. It's just I'm very much spammed with plays at this moment in time. Very happy to so to introduce you to, and to work during these times. So we are running a sale right now for you to catch me in my private Discord, as well as catch me while I'm live streaming each morning and talking about these tickers, talking about some entries, talking about some exits, talking about some stocks. Anyway, we have a link in the description below. How can you take advantage of my early fall of 2024 sale? It's going on now for about 12 days and 11 hours. After that, my prices are gonna go up almost. They're gonna increase more than 40% from the current sale price, and I'm not likely gonna give a sale. I mean, I've just seen somebody go to a restaurant. I read this blog post about a individual went to a restaurant and with 4 kids and his family, and they spent $420 on a dinner. So I don't believe I'm charging you guys a lot of money to take advantage of my skills. I have a lot of skills to trade these small cap markets, and $420 for a meal, it's a lot of money. And I'll probably spend that today. I'll probably spend that $420 today, because this was a good day for the meal. That's funny. That's funny. So, you have to understand, trading is very difficult. Trading is very hard. Trading takes a lot of practice. Trading takes a lot of screen time, and you can take advantage by taking advantage of the summer, fall of 2024 sale, going on for a couple more days here, and that's about it. That's my presentation for today. You have to you have to understand this. This is what you have to understand. You have to understand this. Look for stocks with the lowest float. Look for stocks underneath a dollar with lots of volume. Look for yesterday's stocks that performed well, like Nuke. Then examine what happened yesterday. Yesterday was a depression. Uh, Today is a euphoria. What's going to happen probably tomorrow? Tomorrow's probably going to be a chop. There's neither when it's euphoria, the bulls are winning. When it's depression, the bears are winning. It's very, very simple. Stocks never remain too bullish. Stock never remain too bearish. It's a big fight between the bears and the bulls each and every day. So if it was very bearish yesterday in small caps, today's going to be very bullish. If it's very bullish, tomorrow is going to be less bullish. It's always plays tricks on you. You have to understand this psychology and you have to adapt to it. You have to have your scans, you have to have your hotkeys, you have to have your broker, you have to have your screens, you have to have your alerts, you have to have your experience, and you have to get into it and make some money. Trading 20% volatility on these stocks is very difficult and is not easy. I've seen traders make 10 cents sometimes and live streaming with their, I've seen traders live stream 10 cents of profit. I don't think 10 cents is really enough. If you like to understand fully small caps, take advantage of the sale and see me trade live and see me watching these tickers live because there's no other way you can learn this by yourself. It's going to be very hard. It's probably going to take you years, probably half a decade to do it by yourself, maybe a whole decade to do it by yourself, or maybe not. Maybe you'll just quit first year or second year. That's how most people do it. They quit after a year or two. So, hop in the private Discord, watch these all my videos, and good luck out there. Trading is difficult, and it's always been difficult. It's just if you're not listening to your emotions and if you're understanding what psychologically is going on to the markets, you'll be able to adapt and make good decisions the next day, which actually contradict what happened yesterday. We're in a constant flow of bears and bulls every single day. Other than that, that was my presentation. Hope you guys enjoyed it, and I'll see you all in my next video. Peace out. What's going on, traders, and welcome to my stream. Today is a great day. We're around the holidays, and I wanted to do this video as well as a couple of slides. It's been a monster week throughout a three week period. I think I netted over 100,000. It was a great experience, and right now I'm sure everybody's celebrating Christmas, but this is a nice guide of how I manage day trading psychology. I think I believe day trading psychology is one of the most important thing. Trying to become smarter than the other person and not go into some common mistakes. And how I attack the market on a daily basis and how I manage my emotions during trading. Psychology is one of the most important thing, much more important than sizing, how to find plays, how to trade. Dealing with yourself is some of the most important things that I have for you here. So I prepared a nice slide for you guys, and we're gonna start out with my webinar here. This is kind of like my platform. I've been trading for 16 years, I believe, since 2008, I believe. Learned micro caps, OTCs for a while, traveled the world, and now we've been trading small caps for about, I don't know, 6, 7, 8 years on the regular because the OTCs kind of died. So this is kind of like my setup, what I look at every single day, like my routine. This is my keyboard, my mouse, my setup over here. So I have about three monitors, looking at about eight to nine charts every single day, as well as level two and so forth. So we're gonna proceed on. Like, how was my week? Currently, we are in December 2024. As you can see, these are kind of like, what I track, what I did every single day. And you can see so here that multiple times when I had a really crappy day, like here I was down around 7K. Immediately I bounced out having a 49K day over here. And recently when I had a 13K loss here, I bounced back into a 7K win over here. So you can see that pretty much after I have like a loss the day I kind of fight back pretty hard the next day. Just sometimes I get rewarded, sometimes I get a bigger loss. But in this situation, it has worked out. So it's been a pretty monster week, monster month, December 24, probably the best I've seen. And the same, following my checkbook. I mean, this is kind of like my amazing logbook that I have here. I go through, I go and log, I go review my charts, and I write in it, what it was the mistake that I had, um, what was the mistake I have, what can I learn from losing in that trade, and how can I improve the next day. I have not been using this track log as much, but should be using it every day. I kind of do it like mental work, but it's good to have a logbook. Either you review your trades, either you take a screenshot and review them over the weekend, but that's kind of like how I dealt with it, so you can basically improve. So today we're pretty much around Christmas holiday. I also, was green these 2 days over here. I have to log them, but the way I pretty much deal with psychology. We're gonna start out, some basics. This is the mental game of mastering your emotions in trading. You have to understand that this is a very good example of how emotions pretty much impact your judgment. I pretty much found out that usually you have optimism, same in business, same in life, but in trading, most of, you have optimism over here, you have excitement, you have thrill, you have euphoria. So you have to really watch your emotions, especially during times of euphoria, because at euphoria, it cannot get any better than this. That's the thing you want to understand. Like, once you're into the euphoria moment over here, uh, things cannot get any better than this. So it's likely you're gonna go downhill. You're gonna have ups and downs of trading and ups and downs in life. The sad part about trading is that there's nothing more higher than euphoria. Like, even when you're in life, say you won a lot of money at the lotto, that's your euphoria moment, and then everything's downhill from there. Until you have something new. Say you won a big football game, everything's down from there. I mean, you have to work yourself continuously throughout the cycles over here. You know, you have despondency, you have hope, relief, optimism, excitement, thrill, and euphoria. So these are very important to see like where exactly you are. So every single day when I look into a stock, I try to get myself into the trader's mind, try to get myself in the buyer's mind, the short seller's mind, and I try to understand like what is a short seller feeling at this moment in time, and what is the buyer thinking at this time when the stock did this and when the stock did that. So I constantly try to, when the buyer is feeling euphoric, that's the time to short. When the short seller is feeling, I don't know, despondency, that is the time to sell. Because so every single stock goes through these cycles. So remember this cycle. This is a very nice cycle. This applies to everything in life, your dating life too, uh, your stocks, your portfolio, your your fitness. I mean, you have to work through um, these emotions of hope, relief, optimism, excitement, thrill, euphoria, and then it's down the hill from there. So key indication from this, you might want to write it down, is that after euphoria, there's always comes depression, and after depression, when the market was depressed, becomes euphoria. Same thing in uh, the Bitcoin thing. Bitcoin hit 60,000, everybody was euphoric. Then we came to 20,000, everybody was depressed, and now everybody's at 100,000 Bitcoin. Everybody's euphoric, so probably it's gonna come back down. That's just basic logic. So this is a really good example, like how I look at things in life. Having patience, like this is a very good example. Like the person with most amount of patience. Kings were created with patience. I saw a quote by somebody. It's like, uh, you know, treat a man to have patience and he will become a king. And Patience is probably the most important thing. Having patience, all things difficult because before they come easy. This is really good. Uh, s- Sometimes I sit and have no play and nothing hits my scanner between 7 a.m., 6 a.m., and 11 a.m. And sometimes there are 3 to 4 to 5 plays or more pre-market, more than I can name and more than I can pretty much take advantage of. Sometimes I have 7 plays per day, and I have to sit here and take advantage of them plays. And sometimes I trade them so often that I kind of get sick of so much trading, because it does do a mental and emotional toll, riding these ways of volatility. Because sometimes you can lose on one or two that pretty much knocks out like 3 or 4 winners, and you're pretty much emotionally unbalanced for a while. So the thing I want to get from you guys, patience is probably the most important thing. It's a marathon, not a sprint. If you're not feeling it, do not continue on trading. If you respected all my rules, because I have tons of rules in my course, the beginner's course, make sure you go through that. You will survive if you respect my rules. If not, you will just be at the mercy of your emotions. So understanding that you need to have patience. That's the most important thing. Get yourself a comfortable chair and just watch a lot of stocks. That's the key to success for me. Emotional control, that's probably one of the most important things as well. I mean, when stocks go up, I mean, I've seen I've seen the excitement that I get on boards when everything goes up. Everybody's excited. Everybody's want to trade. Everybody's wants to join. Everybody thinks, right now is the perfect time to make your millions and make your life's salary. And that's and when everything is depressed, you couldn't get anybody to do anything. So you need to be in a Zen mode at all times, because I have experienced the ups and I have experienced the downs. Um, a lot of people cannot take the downs that much. I've experienced a lot of downs and down and ups as well. It's just a lot of people cannot take the downs. The downs are very low, and the euphoric, you feel like invincible. So, in order to combat this, you need to be like, say, I pulled this picture out. This is like a Tibetan monk. You need to be like a Tibetan monk. You need to be unattached to the outcome. Uh, Unattached to the outcome. Build a life that supports it. Like this is probably the most important thing. You need you need to be need to have zero emotion when you're winning and zero emotion when you're losing. A lot of days, sometimes I was losing multiple days in a row, s- and you need to have, and it's very hard to really
to really get your ego out of the out of trading. Like trading, the person that has it's very ironic. The person that has most amount of ego, that's the person that's going to be least successful. This business pretty much rewards the very patient and the people without the ego and the people that um, pretty much keep on going because the opportunities are there. You might not get them today, but I will definitely get them tomorrow because every day there's an opportunity. The key is to not lose all your money and lose all your chips and quit because the trading the trading the trading hill is very steep. Like you're shoved into the market, most of you with no experience, what's a good trade, what's a bad trade, and you have to, perform brain surgery basically in your first year. So you're putting a lot of pressure on you. So take it slow. You need to have a Zen mode at all times. When you win, you have to be flat on your emotions, zero emotion. When you lose, you also have to be flat, zero emotion. It's very hard because when you're winning, you have this grind on you have smiling all the time. When you're losing, you have just a big headache. So I've trained myself, even though you go through these emotions, I looked in this picture, like you have doubt, you have anxiety, you have frustration, you have anger, you have overthinking, you have what is that? Screaming. You need to be zen and like right in the middle of everything. You cannot really let emotions really cloud your judgments because usually when you're most euphoric, you make the worst decision, and usually when you're most depressed, you make also the worst decision. I've recognized that. You probably quit or do something stupid. So, like when you're most depressed, you try to throw the kitchen sink at it because it's not working. And when you're euphoric, you think you're unbeatable, and then you take the biggest loss. So these are really good things. So in order to combat this, emotional, how I've been able to deal with my emotions in trading, I created a 6.5 hour course in which I go through, not only the basic money management that I use for small cap trading. I use the basic rules for small caps. So I have a 6.5 hour course where I, explain to you how to have basic money management on depending on how what happens that day. Basic rules for small cap stocks. And I also have basic setups, like 1 or 4 examples of all my, key home run setups. Like I have tons of home run setups, A plus setups in which I attack the small cap market, and I keep like I think over 10 examples of each. So not only I give you guys rules, I also give you money management skills, and I also give you an example of the types of setups I'm looking at every single day. This is included if you decide to sign up to my website. Link in the description below. And actually, we're actually doing a sale right now for winter holiday that ends on December 31st. So this is really good for me. This is what helped me out, stay into the zone and not have me lose all my money. Because if I lose all my money and lose all my emotion and give up, I don't want to do that. So that's kind of like what I did here, and you can go through each of them, and you can click on them. And these are like, I have about, I think, around 16 flashcards here, just the basics, the most important thing. So right now I'm actually working on a course. This includes, I don't know, this is a small cap, a more advanced course, which you can sign up to to pretty much receive a link when is this going to be available. But it's basically, 4 or 5 years of data of small cap stock each day's four or five tickers I traded that day, compiled into a course so you can see similarities and know what to expect about each setup, whether you're shorting, buying pre-market, buying day breakout. Like I said here, these are advanced small cap strategies backed by 4 years of data, over 5 to 7 stocks collected a day, uh, and traded throughout a 4 year period. And this was going to be available for purchase soon. I'm still working on this course, and I'm actually adding all these stocks that I'm trading this fall. So accepting losses, this is basically, these are some of the basic. These are some of the basic money management rules. Obviously, you don't want to put thousands of dollars down the toilet. Most of you just want to jump into the trading. I've seen the message board. Everybody's asking me like, what's my broker? What's my trading platform, so they can mimic everything I do. I do appreciate that that can work for you for subscribers only. I don't recommend you guys follow me on every single ticker because some of them may end up not working and some of them I might end up flat, and I do recommend you guys signing up to see what I'm trading and trying to see what I'm thinking throughout the day, because I'm always trading from 7 or 8 in the morning till about 11 or 12 each and every day, and sometimes all day long. So you should be in my private Discord room if you want to get access to my ideas and what I'm doing that day. But some basic rules for accepting losses. Most of you will likely flush a lot of money down the toilet before you recognize that the knowledge I'm trying to teach you is actually, doesn't have a bias to, upcharge you a $5,000 course, or pretty much upcharge you, more than it's fair for a monthly fee. A lot of people there's actually not a lot of people that are charging less than me, considering my experience. And most people on the internet will try to scam you, and they will try to sell you a very overinflated course, and that might not work for you. But in this situation, you need to accept losses. Managing losses based on Nasdaq's course, like one of the greatest things I've read. A good trader is a trader that knows how to lose well. Um, if you understood that, that's great. So let me repeat that. One of the best traders know how to lose well. If you can manage your losses and minimize them, and because sometimes you buy something, and if it doesn't do exactly what you want it to do, you get out and you're like, okay, I was wrong. And then you stay wrong, you lose 50, $100, and that's it. And then you make thousands and thousands and thousands more on other stock. But if you don't know how to manage your losses and you just come in and you just fight it, and then you get stubborn on it, and then you add and you add and you add, that could be the end of your career in that ticker. So some of the basic rules over here are maximum loss per day, maximum loss per ticker, and if you're profitable that day, never give back more than half your day's work. Or, one of my favorite rules has been to keep active during trading of small cap stocks. I never buy or short sell a ticker more than 2 times unless I am winning. So if I lose 2 times on a ticker, I likely going to trade it. If I'm trading a ticker, more than 2 times, it's because I'm winning. But if I'm losing, I do not trade a ticker more than 2 times. I get this headache, I get this migraine, I get the ticker wrong, and that's perfectly fine. You just move on to the next ticker. This is a very good example of some basics knowledge that will help you out. And trust me, this is probably the most important thing you will learn. Because a lot of tickers just don't do what you want them to do. And if you do not know this, you will lose your account very quick. Developing a positive attitude. There we go. So this is a pretty good book. I think this guy wrote it by Mike Bellafiore. So yeah, this is actually a good. You need to you need to pretty much download this his book. I'm not affiliated to him. But if you want to become like a professional trader, you might want to take a look on how to be a professional trader. Like, the market doesn't owe you a thing. Just because you pressed, just because you turned on your laptop, the market doesn't owe you a profit that day. A lot of people have this entitlement, and this individual in his book really broke it down, how these firms and how these companies, have meetings, before the market open, and they talk to their lead traders how to, move the stock to to create the most liquidity, stop everybody out, and make the most for the traders and for the firm. So the market is um, rigged against you at all times. It's very legal for traders to manipulate stocks and take out your stop losses. It's nothing unheard of. I've seen them do it all the time, and I've seen millisecond algos in there as well that take out your stops and then it plunges. So it's not illegal. It's something they do, and you need to, if you're just going in there and you don't know what you're doing and you don't have your data, it's a really big minefield that you're walking into. It's like you're walking in the desert and there's mines everywhere, and you're trying to get to a new water source. Eventually, one of those mines is going to blow up your account. That's if you do not have your data, there's just a matter of time. If you show up at the wrong day, wrong time, wrong hour, and you press the wrong button, I mean, statistically speaking, 90% of traders lose money. So in order to understand this, just understand like how big of a minefield you're in. And in his book, he explains very thoroughly like how much work they put in, their, their, their skill and their trading skill to to become competitive, because this is a sport like any other, and you need to be competitive. And what worked last week might not work this week. Market is continuously changing, so you need to develop a positive attitude. Life can be a lot worse if you do not respect your stop loss. And one of the most important quotes that I have read that I have helped me throughout the years is that you had a good day if you traded well. This stuck out to me in his book. Um, you had a good day when you traded well. Like, I respected my rules, respected my stops. I mean, even though the day was red or green, it's just what it is. And the day was good because you followed your plan and your rules. And a lot of people, this is very hard to grasp because, if you don't have rules, if you don't have a plan, and if you don't have a data, I mean, you don't know when you traded well. But I do, because I've studied the data and I know when I traded well. The next thing, the power of discipline and routine. This is a very good example right here. Like, I have a routine each and every day that throughout the years that I have been accustomed to. One of my favorite routines is try to wake up at 6:30 on Tuesday, Wednesday, Thursday, and Friday, because you have a lot of pre-market price action. I don't encourage trading before 9 a.m. on Monday. And one of the most important things over here that you might not already heard here, I don't encourage trading burning out. And I encourage not trading burning out. Like trading is a very hard sport, because you have to sit here and you have to not only trade, like I have to trade, I have to speak while I'm trading, I have to manage my own emotions, and sometimes I have to manage somebody else's comments or somebody else's noise. And trading is as hard as it is. I mean, there's not many people that can talk while they trade. That's it's very hard to talk while you trade because but I've perfected my skill to talk while I'm trading and what I'm thinking about that trade in that moment in time throughout my live streams throughout the year. And so, the less things you have in your life, like first off, you need to trade. Second off, you need to talk. Third off, you need to manage yourself and your emotions, and you have to watch what you talk and you watch what you say. And then also, there's also like a fourth thing, like what's going on in your life. Did you sleep well, eat well, wake up well? Did you follow your plan? What kind? Are you in a Zen type state? Your problems, your family, and sometimes you have to deal with, negative comments or negative chatter, and they do influence you, and that's why I never pay attention to them because it doesn't really matter what some average guy in the middle of nowhere with $50 to his name thinks, because most of people on YouTube are not really um, you know, are not the greatest cream of the crop. This takes a lot of work and a lot of practice, and you're just not gonna get there by snapping your fingers and pressing the on button on your laptop that quickly. It's not. It's a job and it's work and it's accounting and it's data, and you have to continuously work at it. Can't just have a limitless movie, uh, delusion that you're just gonna take this pill and you're gonna get on the laptop and then there comes the Bugatti the next day. The money will come and the money comes slowly, but surely, and it will get there. And when you get it, when you get it, they'll get there. I encourage not trading burnout. Like a lot of my max losses have been due to the fact that I'm tired. Trading does a very hard emotional toll on me, considering I have to wake up daily, especially at 6:30, and sometimes it's very hard because you have accumulated burnout. You can, you if you wake up at 6:30 every day and you trade for, I don't know, 5 6 hours a day and you watch stocks, that is a and you do it consistently without a break and without a vacation, it will put a toll on your body and you will be eventually burning out. So that's why I recommend breaks, whether you need a week off, a day off, a month off, sometimes a year off. it's just it's just the way it is. Sometimes you can take a year off and then you come a year later and you're just hitting it out of the ballpark. I do encourage a max loss per day or per trade. Max losses are important, especially the one for the day and for the trade. Actually, I encourage the max loss. Max loss is probably the most important things. You need to have a daily routine that you wake up, get dressed, eat breakfast, brush teeth, make bed, fill water, clean up laundry. Like my usually routine is I wake up. Um, my usually routine is like I wake up, I get my green tea, I get a t-shirt on, I brush my teeth, my face, I turn on the system, I get in front of the screen, and I try to trade for 3 4 hours, and and that's about it. That's kind of like really my routine. I really hydrate in the morning, BCAAs, water, whatever you need. Um, I actually don't recommend you having more than 2 cups of coffee, maybe 1 cup of coffee, because it's gonna make you very agitated. The market doesn't move just because you drank a lot of coffee, and you're not gonna be moving the market just because you drank 3 5 espressos. So I don't recommend you guys drinking too much coffee. I used to drink a lot of coffee and it didn't work out well. So coffee is not really your what worked for me. What worked for me is just sitting here in being patient in my Zen state and just watching the eight stocks market and having a very clean, very Zen-like state, and trying to analyze like what's in the buyer's mind, what it's in the short seller's mind, what has happened the last few weeks, what is happening right now, what time of day, and then I make my trade. So I do encourage you guys to have a routine that you do, or every night. Uh, like, do you have a routine right here? Do you have a routine for evaluating your data? Like, what kind of like like at a firm, at a prop firm, you review your trades the same day every single day. I don't I review them every other day, every day, every week, but you do need to review them, especially your losses, because that's how you're going to improve for the future. Do you have a routine for improving in the future, or are you just going to wing it? Are you just gonna, hide your losses underneath a bed and let them repeat? Because if you don't tackle your losses, they will repeat in your future. Like, I've seen a lot of my losses, they repeat in the future, especially shorting front side, which I'm going to go into the next slide. So this is a pretty much nice example of me not respecting my rules. This is, avoiding common psychological uh, traps over here. This is admitting you are wrong. This is a ticker that I bought around 4 times, and it just, you see my buy, you see my sell, you see my buy, you see my sell, you see my buy, you see my sell, see my buy, you see my sell. This is probably one of the worst case scenario that I've experienced. Like, you can see that, I had a bullish stance on the stock, that, we were in a very low float market. And I thought this is going to be the ticker that is going to continue running like all the other floats. And soon enough, I bought it 4 times, and it actually wiped out like 3 winners that I had that day because I failed to admit that I was wrong. And I was continuously saying to myself that no, I'm not wrong. The stock is wrong. So every time I was buying, I kept adding to my position. I kept buying it, and you can see that every single time we just hit that trend line, and we just didn't go anywhere. And I even hit it over here, and it was terrible. It was a very humiliating event. I'm sure you all have humiliating events, and I want you guys to share that with yourself. Take a screenshot, put it on your wall, print it out, and not let it happen again. Because the market will humble you down very quickly if you do not respect rules. So if I'm losing like more than 2 times on a ticker, I really do stop trading that ticker. So, if it's hitting your max loss, I kept increasing size, so I'm breaking more and more rules, and next thing you know, I have a huge loss for per day on this ticker. This is some common, you need to admit you're wrong. Like, nobody knows where the stock market is going. Nobody knows where each stock is gonna go. The bets you can do is to, bet. Like, nobody actually really knows. Even the fortune tellers, they don't know where the stock market is going or where that stock is going. That's why it's called the stock market. The stock market is a thing that you can only speculate on, and you can, base your judgment on past performance to equal, you know, predictable future results. That's really what we're doing here. But nobody really knows where each stock is going, and if they do, they're probably lying to you or trying to sell you something. Each day you can be wrong multiple times, and you can be right a lot of times. It's just depending on how well, what kind of what kind of stocks you get that day. So in this situation, I was wrong. I didn't admit I was wrong, and sometimes you will have one of these days. The next ticker is probably right here. This is me shorting front side. This is a stock that I shorted over here. You can see multiple times I shorted at 550. This is actually the stock that I made a lot of money on. On Friday, it was like a 30K winner, and I was pretty much over my risk limit. I was actually risking, a couple of days work, maybe like 2 days, maybe like a week's work, because I didn't really want to take my short out because I had a short over 550. The stock dumped to 450, and then it came back to 550. So usually my rule is if I short something, it comes back to my entry. I do need to cover it and then re-examine the situation later. In this situation, I pretty much held it and I added to my short over here into the 750, $7. So this is a very good example of what not to do because one of these days, I mean, these things go from 150 to 7 or to 8 and sometimes they go to 100 and there's really nothing really you can do about it. You cannot let, I've seen things go from $1 to $8 and I've seen them go from $1 to $20 or $30 or $50. There's no knowing where it is. The best idea I have for you, like if you short 550 and we come back to 550, either A, take some out when you're up 20%, and then if it comes to 550, take it all off, and then we come to $8, start shorting over here, because this ended up being one of my biggest gains. I ended up making over 35K on it, and just adding to my short. And in this scenario, I was right, and it actually I think unbalanced me emotionally a bit because I started to get some flu-like symptoms, and I had to really retreat and not trade so aggressively for a while because when you do trade aggressively, it does somehow unbalance you a bit, and especially shorting front side and not taking a flat stop because then you're pretty much putting in play, weeks of work, a month, 2 weeks of work, and you're at the mercy of the market of being right that day. So this is a common psychological trait that I do need to work on. It's a curse as well as a blessing. Sometimes it works out and I have a huge gain, but sometimes it just goes into a disaster mode. So I'm trying to work on my, common psychological mistakes and traps that I have been dealing with. The next one is FOMO, very basic FOMO. Like I've seen this ticker in the morning. 18 to 44. We have a downtrend break, and this ticker has performed so well on news with Nvidia. You can see announced it has joined Nvidia Accelerator to boost e-commerce. Then you buy it as it breaks this downtrend and it VWAP reclaims, and then you see it move so big, you think it's just gonna continue on. It's gonna go to $1, $5, $10, $1, and then you refuse to take it off, and then it dumps on you, and then you finally take it off as it comes back, and then it sells off. Like we've been in a market this winter or this Christmas where a lot of tickers without any news have performed better than with stocks with news because as the market is very seasonal. The market is very, sometimes as of right now, there's more tickers without any news running much better than stocks with news. So you have to be very mindful of that. That these companies release news, and they're actually most of them have been selling off after the news. So, pretty. This is an example of FOMO. This is a very good example that I'm having myself work on it. This is an example of fighting a stock short front side. Like in my course, I do recommend not being more than 30% on size. as the stock, squeezes higher. In this case scenario, you have the downtrend break, you buy it at $6, and for a lot of times, if the stock comes over here where the pre-market high is, you tend to sell into resistance. Like seen a bunch of usually what happens is you buy support, you sell resistance, right? That's that's really that's very it can work or it cannot work. You have days in which the resistance the resistance acts as resistance. Like right here, there's the pre-market resistance. It acts like resistance and then it rejects. And you have days, since it's around Christmas, where it just blows through resistance and becomes a breakout. So you have to really judge, it's not necessarily, a fixed idea whether to short resistance or buy support. You have to adapt to what the market is showing you, whether the market favors shorting resistance. Most of the time, it favors resistance, and most of the time, it favors buying support. But in this scenario, it blew through resistance, which is the pre-market high here, 780 or $8. And then what I did was I added short and then I bought my short. So, fighting a stock on the front side, uh, you know, understanding like in this situation it was a breakout and we broke through resistance and there's no reason for me to fight it, just because I don't think it's going to go higher. In this situation, the stock went from 5 to over 15 in a very short period of time. So fighting this, just when you don't think it cannot go any higher, it can and it will, and you have to prepare yourself for this type of action because if you're used to shorting resistance over here and usually it comes back down in a much more colder market from here to here. Once you're in a hot market, you need to adapt and keep on riding this huge momentum that we have here. This is a really good example in PRFX, fighting a short front side. Developing a positive trading habits. Like one of my favorite trading habits is, a lot of people teach you about meditation. Meditation is great. Sitting with your palms, listening to biannual beats or whatever the beats you want to call them is great. I enjoyed it. What I like to do is I like to do walking meditation or biking, listening to an audible book. If you cannot sit there and listen to some music in your headphones while performing the lotus, that's cool. Just make sure you walk around the nature, go in a park. If you're in a busy city, you will need to do some nature stuff. Take a walk anywhere around the city, bike, meditate. Uh, you need to, vent. Make sure you do this very, you need to vent at all times. Um, that's how you achieve mindfulness. You need to be in a Zen level state at all times, whether you're winning, whether you're losing. And most of the time, you're going to be losing. That's the sad part about you as an individual that is first starting out in trading is that most time you're going to be losing for a long period of time until you get it. So I recommend taking it as a longer project with many years to come. Invest in your education and be a long traders that have mastered this skill. If you can't meditate, that's fine. Walk around the park. Do slow intensity cardio. Don't stress yourself. You need to develop positive trading habits that bring you back to whether you had a big loss or a big gain and bring you back to a Zen-like mindset. If you don't like walking, try to pick up a bike, an e-bike. Actually, my e-bike battery is kind of dying right now. It can only go like half an hour before I have to charge it because I've been using it for so long. This is the same e-bike I had for I don't know how many years. At least 10, I believe. This is the same e-bike I had for 10 years and the battery's cooked. You can't meditate, you don't want to walk, get yourself some a bike around. Biking meditation works the same. Sometimes I bike for hours at a time. Sometimes I bike for, I mean, today I think I biked for an hour and a half and I didn't even feel anything. Listening to some Alpha God book, which was pretty good. And, make sure you uh, pretty much get your body moving because you're going to be losing a lot in your first year if you do not invest your money or your hard-earned money into a course or a strategy that I have developed. Most of the time in your first year or two, you're going to be losing a lot. And I recommend, to invest in yourself so you can have a quicker time to get to, mastering this skill. This is a skill that takes a long time, long dedication, long commitment, and lots of money to keep yourself still here, even though you will be losing for a lot of times. Most people quit because they haven't done it long enough and they don't continue going on even though they're losing. But I've still been here and I've been doing just fine, even in times of losing, even in times of winning. So these are really good positive trading habits. And this is the end. Reach out to my private Discord, link in the description below. Reach out to my private Discord, become a member, and come into my private Discord and chat with me each and every morning and hear me speak on the microphone. Use the contact icon on the main site to get exclusive one-time discount. I mean, if you've been watching for so long, now we're at the 50-minute mark. Make sure you contact me on the button, on the contact button on the main site, and ask about a one-time discount that I will be releasing to you. Um, if you're interested in that, make sure you contact me on that button. If not, that's just fine. We're running a seasonal special right now, and we're running a Christmas special, and I'll leave you at that. Trading is a very serious matter. I have perfected many aspects of my, psychology. How do I find plays? How do I structure my day? How to think? What kind of platform to have? Brokers, all that. So I have perfected that throughout the years. There's a lot of work to do, but so is brain surgery or being a rocket scientist. Brain surgery, being a rocket scientist, being an engineer, it's very similar or equal to being a trader. I'm sure everybody can wire $1,000, $2,000 and call themselves a trader, but are you a consistently profitable trader? Because if you're not, you're just a statistic that lost his trading account. In order to receive consistency, reach out to highly educated and highly skilled traders and align yourself with those individuals so you can consistently profit from the market. This has been my presentation. Make sure you give this video a like, subscribe to my channel, join the free Discord room, um, pretty much subscribe to my email list for upcoming promotions and sign up in the link below and to my private Discord so you can take advantage of each of the opportunities that we have in the market, Monday through Friday in the morning till about 11 or so each day. That will be it, and I'll see you guys in my next video. Peace out.